Good evening, everybody. Welcome to Urban Economic Empowerment Show. I'm gonna get into some grants because I am searching for some grants. So I say, what better way for me to find what I need? I can share it with you all at the same time. Let me get my little self squared away. I hope you all can hear me. I'm not sure if you can hear me or not. So let me check out the scenes, see what's going on, and make sure you all can hear me. Um, let's see. Let's see. Make sure I can be heard. Okay, I think I'm good. All right. So peace, power, and profit to everybody who may be tuned in. All right. So what I'm getting ready to do, I'm about to look for some grants. And I just need to find me a notebook real quick. How you guys doing this evening? What y'all got going on? No, it's tax season. And some people I've already saw where you've made your earned income was more in 2019 than it was in 2020. That it's giving you a little favor. So some people are getting more than, even though they've received those earning credits during the year, they're still getting some really good tax returns. And that's pretty cool. Now, all I need to do is find me a pen and I'll be ready to rock and ready to roll. All right, notebook on deck, pen on deck. Because one thing we need to know when we're looking for grants and things of that nature, that you definitely have to document because you'll forget. You'll forget where you saw the information, and we don't want to forget. Okay? We do not want to forget. Wait. Are these people in our? Hold on. Hi. I gotta figure out who just came in because I sure don't want to be showing nobody on the screen that I don't know who you are. I suspect you guys are in our investment group, otherwise you wouldn't have gotten the link. Hi. Can you hear me? Okay. Let me see what's going on here. Let me see if somebody in the chat may know who it is. Before I delete them out, I would hate to do that. Can you guys hear me? Are you just, your audio is not connected? Okay, now Corey. Hi, Corey. Can you not hear me?
Yeah, I can hear you. How's it going?
I'm fine. Are you in our investment group?
No, I just saw this on the pop up on the Facebook chat.
Yeah. That's it. The one asking the poor man, everybody.
Yep.
Okay, cool. So I suspect the other person may be clear too, because I was like, oh my God, I sure hope nobody. You know, people do weird things on YouTube, so I
Oh,
don't
no
know.
doubt, no doubt.
And it has definitely happened to me. So I was like, wait a minute, who are these? Where you guys come from? I don't know who you are.
I don't know you.
Okay, peace, power, and profit
Same to you,
to
sister.
you all. Okay, all right. So what I'm gonna do, I know you guys probably want to hear about the market, right? I'm gonna first I'm gonna talk about some grants, and then the brothers will shift in, and we'll get to talking about the market. But if you guys want to talk about something specific about the market, I can do my best to address it, and we could talk about it, maybe some charts, things of that nature. I don't know.
Okay.
Okay. So how long you been trading?
I've been trading since 2021.
Oh, you.
Yeah.
Oh, okay.
Actually,
So you
nah. Actually, March of 2020. Sorry.
much all at the same time with me.
Yeah, I joined Kerry Urajoma's stock class.
Oh, so you might be more knowledgeable than I am then. So
Say
you probably
again?
got you probably have your good methodology down pat.
Now, my problem is I keep changing my methodologies. I got to stick to one thing and go off that.
Right. Well, sometimes what I just, well, probably not my methodology. I don't change. I probably change what I look at first to determine whether or not I want to get in that trade and test my methodology, if that makes any sense.
Yeah. Okay.
Yeah. So do you use TradingView?
Yeah, I use TradingView. I
Mhm.
use Black Box Stocks.
Oh yeah, I got Black Box. Mm-hmm.
Yeah, I love Black Box. And
Yeah.
use different things like bar chart.
Oh, yep. And Earning Whisper
Yep. Yeah.
and Finviz.
Yeah. Well, I got to worry about trying to buy all these services, so I just use the free services for those. But
Yeah.
that's the hard part.
Yeah.
Saying, "Oh, I want to get that. I want to get that."
Yeah. So yeah, I got it. Yeah, I got it in Black Box, but the African Emporium. And I ain't really so what I'm gonna do, I just start off where I was gonna start. And then we'll shift into it. So if you want to stick around, hey.
Okay, cool.
I'm gonna talk about some grants real quick because I was looking for specific grants and I figured I'll just pre-reference the show and start off with some grants. And as we always do, we end up talking about the stock market. Hey.
Hey, how you guys doing? Peace.
Oh, is it Sunny?
You know it.
You fired. I was like, who is it? I was almost scared to start the show. I had to ask Brother Corey, like, how you got it here? He tell me he got it from the group. I said, okay, it's got to be somebody from the group. I was scared. I was like, oh my God. So then you name yourself. What you must be?
Man,
you must be having fun with that particular company.
yeah, I'm killing the firm right now. I done made almost a G off of them in about 2 weeks. Well, I'm gonna say a week and a half, about a week and a half.
Let me see what's. Let me change out what I was getting ready to do. Then let me backtrack so Sunny could talk to us a little bit.
Yeah, I bought them when they was at 52. They at like I think 35 right now on the puts.
I think I got them. Oh no, I think I got right out. Well, let me just look at this chart while we at it. Oh, yeah, check you out. So
yeah,
you say you got in it at 52. You got in it.
yeah.
So now, why did you get in this?
Well, let me rephrase that. I bought a put option at 52. I bought in at 55. The same day it was going down.
You paid $55 for it, 55 cents?
No, I bought in at the strike price of 55.
Oh, okay. Let me go to it. You definitely be up early, I tell you.
Yeah, you gotta get up early so you can get this money. I got a cold little method I've been doing, since I got everything a broke person needs to get more money out here. You know what I'm saying? So when I started off on some broke stuff, just $20 here, $50 there, $100 there,
like me.
And it works. It's a method. You have to do where you have to read, you have to watch, and you have to pay attention. Those are the key factors every morning. Read, watch, and pay attention. And I guarantee you, and only look for 20% or better. As soon as you get 20% or it look like it's going to come back to 20% after you pass 20%, get over it. And I guarantee you, stay with that method, and you're going to start killing. Eventually, you're going to start killing to where you never have to use outside money for the market. All your money is going to be in the market.
So wait, so back up a second. When you say Wait, repeat what you said so I can so I can catch you where you are. Oh yeah, you say read. So because you're talking to an audience, they may have no idea
Oh
what you
yeah, yeah,
just
yeah, yeah,
said.
yeah, yeah.
So what are
So
you reading? So first of all, let's say what platform are you using?
Weeble. I only use Weeble,
Webull. All right.
and
So let me bring
it's
up Webull on the screen so people can actually see it, and you guys could put your Webull links in the chat if you would like, or you can put them in the Zoom, and I'll put them in the chat for you. Okay. So this is Webull, you guys. Keep going, Sonny.
okay. I got another thing, right? Um, a lot of people get into all these different markets, which are cool and everything, but when I'm telling you guys on if you don't have that much money and you're really trying to start to get in the market and stuff like that, only stick to one brokerage company that you can deal with, and
Mhm.
preferably try to do the best one that fits your criteria, what you can read, what you can do, what you can pay attention to. Because a lot of people will get into any old thing, like they'll hear Robinhood and just jump in it. But Robinhood doesn't have the news perks that certain ones do, like TradingView. They might try to get into eToro, right? And they don't have where you can actually see how how the market is moving up and down on different levels the same way you can on Webull. So whatever fits you and makes it better for you, that's the best one.
Okay. So you all decide basically the trading account that gives you enough information for you to make a decision without having to flip back and forth to different platforms initially when you're starting out. That's pretty good advice. What you say, Chris? I'm gonna stay on that point for a second, Sonny. Give me a minute.
No, go ahead.
What's the question?
When you're first starting out using platforms, things of that nature, you agree with Sonny on try use the platform that gives you the most information. You wouldn't have to flip back and forth like the news, analytics, maybe top earners, low,
Mm,
things of that
I,
nature.
I would suggest, whatever they feel. Well, Weeble is a
Comfortable
little
with.
bit, Weeble is a little bit more complicated for new people. So, I think they should use Robinhood first because Robinhood is easier to use than Weeble is. So, but it's up to them what they want to do. But, if they want to start trading or just looking at stuff, I would tell them to go to Robinhood first because they just have an easier system. It's just easier to use,
Depending
for
on the character. What about
beginners.
you, Core? What about you, Corey?
Yeah, I feel the same. You just stick with one brokerage that you get comfortable with. So my thing is I deal with like 3 of them now. So I got TradeStation, Webull, E-Trade, TD Ameritrade. But I got used to TradeStation and learned how to use that solid before I moved on to the other stuff. So when I start with that one, the other stuff seems to be a little bit easier. So wherever I need to go to find the best information, whatever comfortable for me, that's what I stick with.
Okay, I never heard of TradeStation. Does TradeStation allow you to paper trade?
Yeah, it allows you to paper trade. Yeah.
Okay. All
You
right.
can do crypto as well.
Right. Okay. Okay. All right, so boom. Now they've explored. They're gonna check out some platforms, see which one
But
that works for them.
they should only
Oh,
paper trade
go ahead,
when they
Chris.
when they get familiar with the functions. They shouldn't be paper trading to start off. They should be getting familiar how stuff works. If you don't know how to buy and sell, you should not be paper trading at all. So if you don't know how to read a chart, you should not be paper trading. So you need to understand everything else first before you paper trade.
But paper trade doesn't cost them anything, so
Well, I mean, it's free, but if you don't know how to hit the button, buy or
yeah.
sell,
You fine.
Low blows. He's
Okay.
throwing low blows.
Hey, look, you don't know how to hit the button. Be quiet, Chris.
no, I'm serious. If you don't know
Okay.
how to go in there and buy something,
Right.
and then know how to sell it, why would you be paper trading? It makes no sense.
Yeah, true.
Well, I'm not throwing no
Okay.
shots or nothing like that, but you can't read a chart. You don't know what buttons to press to buy and sell. You don't know what to navigate on the screen. So, you shouldn't be paper trading. Somebody has to show you that, as far as like a tutorial. So I just say start off reading and getting familiar with the app, and then you can start doing that stuff.
Right. Cool.
I like that.
All right.
Hey,
So now,
what I want to let me add something to that real quick, because
go
I
ahead.
like that that you start off like that, but on top of it, pick something that you're interested in. Like start off with something you're interested in. Like a lot of people be interested in meme stocks, right? But just pick
Okay.
something you're
Wait.
interested in. Go ahead.
Okay. No, wait. Okay. So what Sonny's talking about? What he said you were interested in? He's talking about like a type of equity or crypto, or that's what you mean, right? Like, what do you mean when you say
Yes.
interested in?
Yes.
What is in? Define in, so they can
Okay.
understand.
Find out. That's why I say a meme stock. Find out a meme stock that you're interested in, like AMC, BBIG, DWAC, anyone that you interested in, and start off like that. And then when you start off like that, this is what I advise anybody that start paper trading. Before you even start paper trading, find out about the company. Like start off like that. Start a different way, because a lot of people be on the page of where they just trying to get for the money. They're trying to get the bag, trying to get this, and they end up losing. So in reality, have a different format. Be on the page of where you find a company that you like, start studying about the company. If you really think that if your goal and your idea is I'm investing for future incomes, then it's on the page of I have to study the company that's going to be best for me and fits my income so I can make more income. So it makes a big difference. When you start focusing on the companies, then you'll start understanding the game. Then you'll start seeing why you have upsides and downsides. Then you'll start seeing where the bottom is, or where is the gross point that I need to put my money into. It makes a big difference. A lot of people just throw money in there because, okay, I like the stock, I'm gonna just try it out, and not knowing anything. So when you start learning the company, you start understanding how things are working before you start paper trading. Once you start paper trading, you'll see your income grow on that side, and you can actually start matching with yours. Okay, boom, I got $1 million in paper trade, but I only got $100 to put down. So now it's on the page of whatever companies that I'm really interested in on the paper trade side. I could just max it out with the money because I already see it's working over here, so it's obviously going to work over there. But that's all I was going to say real quick.
Right. Thanks everybody for tuning in. You're tuned into the Urban Economic Empowerment Show. We came in hitting hard and heavy. I thought I was going to talk about grants, but listen, the heavy hitters came in and they just detour the conversation. But I love it. And so, based on the conversation we're having, would you guys like to do a use case with the company, and we can kind of walk it through, show some different sites that you can actually explore information on a company, just for practice purposes, just to show people kind of what we understand. Because as much as we're talking and we seem as if we're keeping it in layman's terms, there's still that person out there that may say, you know what, wow, that just went all the way over my head. But what we could do is we could take a company and we can kind of walk through everything you all just said, from looking at, the company background, looking at the news, looking at the fundamentals, looking at the charts, you know what I'm saying? Going through some competitors, just kind of going through some different websites. And that's why I said in the beginning, I take out the paper and pen so you guys can kind of follow, and you can kind of gather some information that you can do on your own, and then create your methodology. And then the next time we having these conversations, or when AE is live, you can kind of track and follow what's going on. Sounds like a plan? I think it's a plan.
Definitely.
Okay, so what's a company? What's a use case company we could do? Y'all want to do a shoe company? Since every time something releasing Nike, they always running. Chris, that's you. What do y'all want to do? What's a good company? You got one in mind? Anybody got one in mind?
You can do Nike.
You want to do Nike? Okay. All right. So I went to Yahoo Finance. Anybody else recommend a site to go to learn about a company?
Oh, that's fine right there.
Okay,
Webull.
boom. Yep, Webull. I'll go there next. So boom, I'm in Yahoo Finance, and as you could see, the summary when you first bring it up. This is a ticker. For most people, when you hear us talk about tickers, that we throw out acronyms. These are the tickers of the actual company. So this is what the market use to track that company. Acronyms. This is the stock price, of course. Pre-market. Pre-market is what, 4 a.m. to 9:30 a.m. And open market 9:30 to 4 p.m. and then after hours 4 p.m. to 8 p.m. So you want to keep that in mind. All right. As you can see, there's different categories that you can look up for this company. You got the company outlook. And of course, it's probably not gonna give me a whole bunch of information because I didn't subscribe to their channel. So we'll go to Webull next. You can see the chart. And right now it's on a line chart. I can always change the line to those who are more familiar with the candlesticks, or some people like to use the bar, whichever more comfortable to you. All right. Then there's conversations out there. You can kind of see what market sentiment is. They're probably talking about what's going on. You can add a conversation or start a blog about what you want to talk about in reference to Nike. There's some statistics on Nike. Kind of what Sonny's was alluding to earlier in reference to learning some of the historical data of what's going on. And you guys can jump in at any time if there's something you want to throw out in reference to researching and learning about the company. I know one of the first thing I look for, people say, well, when you go look for a company, what do you look at? I can tell you right now, the first thing I go look through is see if they got a dividend. I go check and see if they have a dividend. And then I'll look at their earnings per share, and I'll go to FinViz and I'll look at how it's performing over the year, what ATR is, and so on. All right. Here's some more historical data. This is the price. You can look to see what the price has been opening and closing at over time, right? And you kind of see where these price falling in those different ranges based on the different volume. I got into that a little bit with my Qualcomm. I did a lot of that when I was trading Qualcomm. The profile, you can see who's the leadership in a company. What are they doing, right? Financials, you can definitely see it here as well, and it'll show 4 years worth of financials, and you can follow it, kind of see what this company is doing, where it's going, how it's really moving. I think Chris talked about that yesterday. It was either yesterday or the day before on a live. You don't even know, this company can sustain, and you just jumping in at a certain price. Here's some more. Earnings, right? When we're talking about earnings, a lot of people do earnings plays. You can come back and look at this company's earnings over a particular quarter, right? That'll tell you a lot. It shows some options. This is I think this was within open market to show you the trends of what's going on in their options, right? And here, this is just breaking down, I think, who's holding what and where, who has how much of what shares in Nike, right? And you can see the top holders, where it's housed, all that good stuff, and suitability. I'm gonna go to, and this is how they're ranking it and all that good stuff, right? Now let's go to Webull. Let's put in Nike. And as you can see, you all, it takes what time? It takes time. I think Sunny spoke on it. Oh man, hold on. Let me put the other on that earlier. You got to put some time. You got to get some skin in the game. Okay, my thing is spinning, y'all. Give it a second. Now, in Webull, I do know when you go into Webull in the app, you can see the news right there. Okay, here we go. You get the news here, right? It'll also show you some financials, and it'll show you some release dates when Nike releasing some of its release dates, some corporate actions, when the dividends and things of that happen. It'll show you an analysis. What are they thinking? What's the market sentiment about going on in Nike? What's the average target price, earnings per share, and all of that great stuff. Now, and then of course it'll show you company leadership. What'd you say, Chris?
Stock party if you care about it.
Stash party?
Yeah.
Oh, okay, commercial. Stash party. So here's another perk of something that we do. And Stash. Stash is another fintech company you can get involved in. Those of us who have it, I'm in the wrong thing. We go and do our little stash party. We get a free fractional share stocks. And you just log into your account. Give me 1 second. Let me put my little ID and password in. And then you guys can kind of see how this works. I like Stash because it has custodial accounts. And so if you have children, you can teach your kids how to trade and get them all up and running. Right? It's a cool way to teach them, or you can lay something up for them. So here's Stash Party. There's the little music we like to rock to. Hit the freestyle. Bam. Oh, it's easy. Just hit claim stock and bam. There you go. All right. There it is. So I hope you guys got your freestyle. So Sonny, anything in particular for Webull?
Well, you were saying something about dividends, and the best one that I could say for people that are into dividends is Rio. Look up Rio. It's a real estate a REIT. It's a REIT, and basically they pay $5.76 per share, and they're only $76 or 70 something dollars. I think they're at 72 right now, something like that.
You say, wait, hold on. Let me go back.
They pay the most expensive shares I've seen so far. Since from their last update was, I think they had one before that, but their last third quarter or fourth quarter was $5 and some change. Yeah.
Nice. And they're
only $70.
Look pretty good.
Yeah.
70, 78, 70. Yeah.
It stays in the range of 72 and 77.
Right. So boom, that's a good dividend play. I come here. This is FinViz. I'll come in FinViz and look because that's one of the first chart fundamentals charts that AE told us about. So it's easier for me to read and to look at here. So yeah, there's a dividend right there. Boom, I definitely look for that. And basically dividend, the more money you put in, the more money you get back, and you can reinvest it back into your positions. What else do you want to add in reference to researching? Let's go back to Webull.
In reference of research,
yes.
Well, I used to look at dividends first. Now I don't, because it's part of the trickery. So some companies that's doing bad or that's undervalued, they'll put out dividends just to make an incentive for you to want to buy a bunch of shares every time the EPS come around. So that makes a big difference. So what I started doing is now I look at, the first thing I do is I look at your market cap. And when I look at your market cap, then I look at your earnings per share for not last quarter, but the last 4 quarters. And so that's what makes the difference. So now I take your last.
Oh, no, I'm sorry.
Quarter. Oh, go ahead.
No. I'm listening because, listen, you so hyped. You talking so fast. I'm listening to you. Go ahead. Go ahead, Mercedes.
Oh, my bad. Yeah, so I actually take the Warren Buffett approach to it, and so that's what's been helping me for the last few months. I could say, because when I first started, I was up some and down some, but it panned out to me losing almost 1,400 when I first started, and
Mm-hmm.
then it wasn't until I got above 5,000 for me to really start focusing on what I'm actually doing, and so it makes a
Mm-hmm.
big difference. So I started looking at it on the page of looking at the market cap, finding out what was their last four earnings, and then from their last four earnings, I mean the last earnings, I divide the last earnings within the market cap to see a potential of what would happen for the future. So that's where I looked at it on what makes a difference. Now that's not going to be something that's going to work for you
Mm-hmm.
overnight. Yeah, you're
Right.
gonna have to really work on looking at the stocks, understanding it, because even in that part, there's trickery. Some people
Mm-hmm.
have where they had a good year. Some people have
Mm-hmm.
where that last quarter was great. You get what I'm saying?
Mm-hmm.
Like AMC is a prime example. They they were up like as far as stock was concerned, but they were down on the streets when it comes to them being in debt. They knocked down their debt because of that Reddit situation and because of their last quarter earnings. But it's on the page of where they still owe for the next 3 to 4 years. So you have to put that in perspective on why it's not jumping the way it should be when you have uh, a market cap with billions of dollars. So this is how you have to look at it, which makes a difference. If it's billions of dollars, but the stock is only $3, something's wrong, and it ain't a good buy.
Oh, got you. Go back up.
Most of the times, it is when things are done like that, is undervalued, way undervalued.
Get my stash for you. And did that anybody want to add anything?
Yeah, I like that. I like that look at it. Also, I would add too, like if you go back to the Yahoo Finance section,
Yeah.
if you
Gotcha.
go on the holders, one of the things I look for, I learned this from Ian on EYL. He was always saying you can determine how good a company can be possibly by looking at the holders. Like if you see Vanguard and BlackRock in there, you can assure that
Okay.
that's a good company.
BlackRock and Vanguard.
Yeah, so
Yep.
that's one of the things I look to when I'm doing long-term investing. That's one of the things I look at.
Mm-hmm.
When I'm just doing the options trading on the weekly options, I care less about
Right.
that.
Right. Chris? All right, so let's keep the party rolling. I think we were gonna do. Go ahead, Chris.
What's the question?
Oh, some pointers. We were just showing some things that you look at to when you're doing your research. So Sonny spoke about using the market cap, and looking at the last four earnings and making a decision on that. Corey talked about Yahoo, going to Yahoo Finance and looking at the holders and looking to see what companies are invested in. You mentioned BlackRock and Vanguard, those two strong investors in companies. So it's a pretty good buy or an opportunity
I would look at
in
their
your research.
balance
A
sheet.
plus.
I would look at their
Right.
balance sheet, see how much
Right. So
debt they have and how much cash they have on hand to invest into the future to get better.
right.
So
Right.
using FinViz right there, you can find out all that information. And also, you can use FinViz as a scanner.
Yep.
And
Right here.
also each
Go ahead.
stock, like if you go to the search bar, you type in the stock, they'll give you like analyst estimates as far as that particular company. It'll show you all the upgrades and downgrades that they get.
Mhm.
You know, if that company is getting downgraded because, you know, an analyst don't see, you know, them going up in the future or whatever the case is. You know, it's by case basis, but you have all that information right there. So yeah, you see that right there. So downgrade by Wedbush, you know, neutral to underperform. So all that information is there, but you definitely should look at the balance sheet.
Also, another site that AE talk about that I
Tip
use
rank.
sometimes is Tip Ranks. Mm-hmm.
Yeah. Because you got to look at it like you buying a business. So, you know, you don't want to buy a business that's failing and got a bunch of debt and, you know, they really not performing. You know, you always look at the yearly, the quarterly, you know, and try to determine what has this company done in the last year or last 5 years. And yeah, you base it off of that.
Right. Yep. So yeah, definitely.
Hey Mo,
Huh?
I just thought about that. You make me feel like I done learned something.
You did learn something.
Hey,
You
I came a long way. Listen to everybody else, cause a lot of people, Brandon and Chris was my help on the internet type of thing, just watching them and paying attention, and then everybody else was different.
Brother, you done learn more in a short period of time than others have in years.
Yeah,
So
because he focused on coming up with a method. You know, most people like
right.
like I mentioned earlier, just want to make the dollar. You know, hey, just tell me how to make something quick. Okay, just blow me out. Just throw me out. I don't have time for this. Where you know, one of the things AE pride himself on about, you know, that teaching the fish, like he gonna show you, and then you go out there. You better stand on your own shoulders. You know.
That brother hungry. He been hungry. So
Yes,
shoot, when
honey.
you hungry, you gonna do what you gotta do to, you know, get it. You see his name is a firm killer, so
Yeah, that was me. Made me think.
kill the market. So that hey, that's what it is right there.
All right, go ahead, Sonny.
No, go ahead.
No, you said you were gonna say something. Okay, well, I go to Tip Ranks and I'll look to see, you know, if they saying buy, sell, the whole, and I'll go and I'll look. Let's see. I'll go where is a part on here where it show. Yeah, here. I'll see, you know, what they're saying, you know, what's going on in the market. Like they say, very negative, very negative type thing. So of course, if they're saying this, I'm not gonna go up there and try to buy no calls. You know, you mess around and do depending on that time frame. So look at the market sentiment as well, right? I think and one that I really haven't gotten into, but the TDs with the SEC. I haven't really gotten real strong and heavy into those, but I do know that when they like post, so if I'm in Trading View and I go here to the news and it mentions something, you know, I know to go and look or to read it, that kind of thing. So Trading View, I like, you know, it has the news you can bring up and you can see what's going on as well. Right. And then you know, he taught us about what he called Twitter. You can put the symbol in Twitter, you can see what other people are saying about the company in Twitter. And I can't remember my Twitter, kind of always forget.
Hashtag Twitter.
Yeah, hashtag Twitter. Mm-hmm. So you could go to Twitter as well. So let's talk. Which one of these stocks y'all want? Look at.
Also stock twits too.
Who?
Stock twits.
Oh, I haven't been there. Stock twits. Stock.
It's kind of like a place where, you know, investors and traders go and they express their opinions about a stock.
Right.
So they be commenting about, certain stocks, and they got rooms and stuff like that on there. They be going crazy, like people in Webull comments.
Oh, yeah. Yeah.
Because you
Is
can
it
do
free?
it on Webull too. Yeah. Yeah, it's free. Yeah.
Oh, so I need to sign up.
Yeah. Okay.
You also got it with your black box. So when you log into your black box stocks,
Yeah, it's on
Right.
Black Box Scanner. Yeah.
Yeah.
It's on Black Box Scanner as well. So
I got.
you still got
Okay.
yours, Mo?
Mm-hmm.
Yeah,
Right.
it's on there too. Yeah.
I need to learn how to log in and go and get some, I gotta get my life. I gotta get a day where I go in and do what I need to do.
Matter of fact, go ahead and pull it up right now.
Pull up my black box. Let me see.
Yeah. I don't even know why you got it. You don't even be at home like that.
I used to listen to them in the mornings.
They do got the app too, Mo. You know that, right?
No.
Yeah, they got the Black Box Scanner app. Yeah, I be getting notifications all the time.
So I
Yep.
need. Let me figure it out.
You need to download the app too.
Oh yeah, if you got the subscription, you must have that. Them alerts keep you on point.
For
See, that's
sure.
what-
Yeah.
Oh, I'm glad you guys said that because I show. Hold on, I gotta figure out. Oh my God, where's my black box?
With Mo all over the place now.
I bet I'm about to get this. I bet I'm about to get this app.
Right. That's right.
I bet that. God was like, man, I'm gonna be logged into this thing. Okay.
Does anybody jump into the free market game or no?
I
Oh, yeah.
used to. I used
I
to,
used
Sonny.
to.
The hell is
Back
my
in the
name?
gap.
Hold on,
It'd
let
be
me-
a lot of stocks on there that be moving though. I will say that. In pre-market.
Yeah.
Because I jump in it every morning, and I hear people say all the time, "Oh, the pre-market is not that good," but I jump in it every morning, and I'm up every morning, like actually looking for what has fertility and everything. So it makes a difference.
Oh, we'll start looking at that then.
Okay, boom.
When
I
you
got
start
it.
looking at the companies that have the fertility early in the morning, like say for instance, I don't know how it is over there, but I'm in Cali, so I wake up about 2 or 3 o'clock in the morning, get my coffee, get my reading going, see what's going on in the market, and then I jump on the top gainers to see what's the volatile market as far as like the top 10. And I look on the top 10 and I see what the prices are, see what I want to get into, see why the companies are jumping the way they're jumping. You know what I'm saying? And it makes a big difference. But no matter how much you put in there, you're gonna easily get 20% or better every day, because in the market there's always 20% or better of a company every day.
Oh, so you just look at the top 10 gainers for pre-market, and you jump in pre-market, and you
And then get right out. 20% get out. 20% get out every morning. 20% get out.
Mm-hmm.
Now, do you
I
find yourself
guarantee
waiting a
you
lot?
that every day it makes a difference, huh?
Wait, you trade
You wait for the
pre-market?
market to open?
You trade pre-market on Webull?
Yeah.
Yeah, every morning.
Because sometimes
I do it every morning.
I haven't done it in a while, but because I see the stock, I see those opportunities. It must have been on Robinhood. It wasn't taken. Sometimes I get frustrated.
I actually use it as a catalyst to have more money so I can do my options for the day. So like, say for instance today, right? Today I kind of messed up because I had bought into Robinhood. I bought into who else? I bought Robinhood. I bought BBIG, and I bought FinTech, right? And so I only had a little bit of money left, and so the money I had left, I had put into my SPY, and which was I made like about 100 and something off of that, and I only had $19 left.
Oh,
So it's based, you get what I'm saying? And so when you start doing that every morning, it makes a difference and you start seeing your account grow. A lot of us just look for hundreds off the top. But I guarantee you, if you start seeing that market grow 20%, 20%, 20% every day, make that your goal. Early morning, I got to get 20%. You know what I'm saying? Whatever else happens in the market happens in the market, but in the morning, I got to get this 20%. It's too easy. It's right there.
So you making that 20% before the market opens?
Yeah. No, when the market opens, you buy
Oh.
into it before the market opens.
Gotcha,
So like
gotcha.
Oh, you buy the day
like on
before?
Webull, no, on Webull, it shows you. That's why I say it's the difference with these different platforms. So on Webull, you can actually go into seeing what the aftermarket does, and you can see what the pre-market does. So while you're watching what the pre-market does, you look for the volatility. And when you're looking for the volatile markets, that's the ones you're trying to pick and choose which ones you're going to get into. So as you see in them going up and down, and you watching it, and you see that it's at a percentage higher than it was in the aftermarket yesterday, then this is where you measure out which one I want to get into. And it makes a big difference. I'm telling you, I I got a thing, because a lot of people don't talk about when you teaching people to jump into the market, a lot of people don't talk about the pre-market game, and they tell people to wait until you get your foot in the game and wait until you get better. But in reality, if you jump in, like people, I ain't gonna say black people, but people around my area, they just want the money. You know what I'm saying? They don't care about none of that other stuff. They just want the money. So when they start seeing that money really start growing from that pre-market game, it makes a difference. Start being on the page of where only trades I'm doing is early morning within the first 30 minutes, and I'm done with my day. And you're gonna always win.
Nice.
Hey, what's up? What company you in?
I'm in the pre-market Webull right now.
No, I got a customer. I was talking to them.
Man, you over here tripping. You got me tripping.
Also, go to Black Box real quick. I want to show you the stock splits.
Okay. How do I you might have
the icon at the bottom right.
Which one? Right here?
One more over.
This one?
Yeah.
Oh.
But you gotta go to put a stock symbol in the middle of the page. Oh yeah, click Apple. Yeah, you click Apple.
Okay.
Yeah, that's stock.
Oh, what happened? There you go. Okay. Hey, how do I let's see. I have to learn this again. Okay, this post market. Oh, this their pre-market right here.
Yeah, you can see that when you click pre-market, you see all the stuff from pre-market, and then you can hit alerts the next one over.
Right, and it had alerts right here.
Yeah.
And then it has it highest to lowest.
Yeah, I guess the ratio, percent ratio, or change. Yes.
Uh-oh, look at the dark pool. What's going on with Apple? There's some pretty good money in it. No,
not really. If you look at it, imagine how much they trade on Apple on a daily basis.
That's right.
Only it's less than 3%, less than 0.3%.
Oh, so these are small. Well, look at this one right here. This 1.3 million.
Yeah, so see how it says 1.3% average volume.
Oh, okay.
So when you start seeing, I don't think I've ever seen 5, 10.
Right. Turn the light on, Peanut. All right.
See you later.
Peace out.
Well, I'm listening to him. How long I get the cricket?
Okay. Turn the light back out. No, you leave it on. All right. Yeah, I was.
You see what it says load symbol?
Load symbol?
In the middle, where you see the volatility indicator. Type in OS, I think OSTK.
OSTK?
Yeah. No, yep, that's it. OSTK.
This one?
Overstock. And then you see all those alerts it showed us for the morning. It gave us pre-market alerts.
Wow. So that was this morning.
Yeah, early this morning. Yeah.
So you bought an option? Is that what you're telling me?
Nah. I was messing with SPY all day.
Oh, okay. The SPY?
Yeah.
Okay. But in based on what Sonny was talking about, like this alert right here would be well, I mean it's way after 9, but well, it's still pre-market before 9:30. Yeah, here we go. Down here since 6.
Yeah, exactly. Yep.
Yeah, he would this definitely, oh yeah. It opened at $6.40 more?
Yep. And look where the alert got triggered over there to your left.
Yeah. Oh, on the left?
Yeah, where the chart is.
Chart. Right here.
Yes, price alert. It alerted you right there. So if you would have got in right there when it alerted you, you'd have made you some good cake.
Definitely more than 20%. 20%. Let me ask. Okay, so where's Sonny go? So I wanted to ask him how much money was he trading, or just you buying a few shares?
Yeah, it sounded like he was doing small. He was doing with small amounts.
Few shares.
Using that to get into the options game later. That's what it sounded like.
Right.
Oh yeah, definitely small amounts. Yeah, I'm on. But yeah, no, it was definitely small amounts.
So like in this case, let's use this one as an example.
There you go. Those are these two.
Sonny, did you see the screen?
Yeah, I'm hearing.
Yeah. So let's like use this one as an example, the OSTK. So the market alerted early morning at like at I guess it would have been 6:59. It hit an alert, right? Let's just say 6:59, right? At $41.15. And then of course, I guess this is the end of the day. But it went all the way up by 10 o'clock to $50. That's the kind of play you're talking about. But you, of course, even within the 30-minute mark that you're speaking of, you would have made that 20%, right? Where you at? Oh, he got a customer, must be. I'll find that in a second. Okay. Wait. Let me download this thing on my phone before I forget. So when I go to Black Box, I'll look at I'll definitely look at the top gainers or whatever. And then there's another part on here where if I click on the start, it'll show like for the options purposes. Oh, that must be on the options, right?
Yeah,
Where
up top.
Up
top next to NYSE.
Okay, where am I at? Oh, right here. That's what I was looking for.
Yeah.
I'll go to options and I'll click like flow because I'm trying to learn flow, right? That's when you click on one and they have a whole bunch of orders.
Yeah.
Right?
Yep. And the trick is normally what they tell you to do is like stick to the sweeps. So if you click that the filter right above details.
Right here.
Yeah. And they normally say sweeps. So you could say sweeps only on the left side.
Okay.
And then hit self filters.
Ah.
Yeah.
And then I try to put them. I thought you could click on it and it'll put them in order, but
I don't think it does that.
Okay. And then you just kind of gotta. Oh, I know what it is. Yeah. So this is flow, and then the same thing if I put it on alerts, right?
Yeah.
And
that's when they come up and say something is bullish.
Have a good day.
No, Sonny.
Oh no, that was my bad. I was saying have a good day to the customer, but one of the things I was going to say is really it doesn't matter how much money. Oh, go ahead.
You little peanut. Wait a minute. I'm trying to do something. Okay. Yeah, that's so. Yeah, like if you click on it, it'll show you if it was more, that kind of thing. Let's see. Let me go. Yeah, that's what I'm looking for. Okay, yeah, I have to spend a little bit more time in here. I'm about to put it on my phone now. Now go ahead, Sonny. What you talking about?
No, one of the things I was gonna say is even if you only putting in $5 or you're putting in $5,000, percentage wise, it's still the same thing. Get that 20% and get out. That's all it
Gotcha.
really matters. You know what I'm saying? So um, on the chart that you was trying to get me to look at, I couldn't really look at it because I was typing something at the same time. What was you asking about?
Oh,
Oh, now OSTK, I think you was asking.
oh yeah. Oh
Yeah.
yeah, I was asking. I was. Oh yeah. Hold on. Let me go back to it.
Yeah, you
So
got
how to?
NYSE.
Okay.
And
Yeah, I
type.
had got into FTK and I got into I think it's IMM,
Now in the middle, see where it says OSTK.
right?
Now select overstock.
Yeah, Sonny. I was using this as an example that you see in pre-market, it already had given us the alert,
Hmm.
and of course, what I was saying was that this price, it up went to the upside, and I was saying that your 20% in this case be a good example because we know it went to the upside at least 20%, if not more, because it went from $41 all the way up to 50 in pre-market.
Well, another thing I could tell you about what I'm gonna end up doing it when I get off of work anyway. But I um, go to your top gainers and look for the aftermarket. And when you look into the aftermarket, see what's the top 10 in the aftermarket on the ones that jumped up, and then start reading on why they jumped up. And then you start paying attention to the last, basically the beginning of the year. I was gonna say last couple of quarters, but you might as well go on the beginning of the year and how it outperformed from the last EPS day, and that's what makes a difference.
So this is top gainers after hours. And I suspect it's already in order on who jumped up.
Yeah, it's still going.
Right, because that's right, because it's not 8. Right. So you say
Hmm.
you the top whatever from here and then do your research on what's going on with them. Right.
And then that way you have a better prediction. It doesn't mean that they're going to do good in the morning, but you'll
Right.
have a better prediction of what's going to happen in the morning, so you can be prepared.
Right. Narrows your search. Or narrows.
Yeah.
Oh, they did
Like,
jump. Look at this. We went almost to 10 cents, 15, 14 cents, 10 cents, 11 cents. Okay. We're checking out the scenes. Oh, I
yeah.
learned how to
So
hit my
like, if you're looking for
Twitter.
something, and then that's another thing about the pre-market. If you're looking for something with a lot of volatility, and you're trying to like make quick cash real quick and make it past the percentage, then you need to go for things that are smaller in stock. Like what I look for when I'm jumping in the pre-market is anything $10 or less. Because it's cool. Like, say for instance, the other day DWAC jumped up to like 100 and something. That's cool and everything, but I'm only gonna be able to buy 1 or 2 or 3. You know what I'm saying? Whereas you can buy like what did I buy on the IMM? I bought 1,000 of those. The FTK, I bought 100 of those. You know what I'm saying? You could buy a bunch of them and make more money based on the validity versus the volatility versus buying a big stock that has a bunch of volatility, but it's not really going nowhere because you can't put no money into it.
Yeah.
I hear you. So you can Chris spoke earlier on the FinViz and the screeners. So here's another way. You can go to the screeners, and if you want to look for things that are $10 or less, you can go to all, and you can put in the price under $10. And you could choose an exchange, or you could say any. You could choose a market cap, or you could say any. So you want to narrow this search because that's 142. I usually, and I learned this from, of course, y'all. I'll put it if it's optionable. That narrowed my search to 76. I will put I'll say US only. That narrowed me down to 56. I can say let's say dividend the 5%. Boom, that narrowed me down to 3 pages. Boom, see how it's narrowing my search. And then I think we usually put in market cap of 2. I think 2. I think mid. I think it's right. Boom. See how it narrowed me down some more on prices. So you could use FinViz as well, and you could determine how. Hey Brandon. And I have some stuff. Oh well, I'm not logged in, but I have some presets as well. I think we did 2 to 10. Yep, like that. Bam. And or you could what's the other one? I think we did volume, anything over 750K. So you see what I'm saying? So you could look for stocks under a certain dollar amount that way as well. Yup. Sonny, what's his name? Where is Thunder? Thunder, I'm looking for you. So
Mo, do you remember like it was probably like a year and a half ago or like 2 years ago when Thunder had first started talking about the hedge funds
mm-hmm.
and hedging? I had no idea what he was talking about. Like literally, for real. And it's crazy because like now I'm on it, but I had no idea. I was like, hedging? What is hedges? Like what is that?
Well, AE talking about it a lot now. Everybody's talking about, what happens is because some people get bored, when we're talking about, when you're talking about investing, because it is information overflow sometimes for some people. But what I found out is that the more you stay around, listen to the lingo, you will learn, you'll start to understand what's going on after a while. Now I do, use my charts and everything, and I got something on the screen and I don't even know what it is. I'm always messing up my picture over here. Who's that stock you said? What was that one you threw out, Corey? OTS? What was it?
OTSK. That was the one from earlier, or OSTK, something like that.
Yeah, Overstock.
Yeah, I just wanted to bring it up on the charts. Okay, now.
Yeah, because I started to buy. Oh, go ahead.
Well, go ahead.
No, I was gonna say I started to buy that this morning, but the volatility wasn't up there. So when you look for it in the morning, usually I time it because I've been doing it for a minute. So like in between 4 and 6 o'clock, when as the market is getting ready to open, you'll start seeing once it gets about 5 o'clock, 5:30, it should be at least 1 million. If it's not 1 million or better, then it's going to end up dropping because it's not volatile enough. So when you start seeing them other markets, they jump like that. OSTK, it had like, I think 300,000 or something like that by the time the market opened. So I didn't jump in it.
Where's the volume here? Oh, I don't see the volume on here. Oh, here's it. So it says 6.47 million.
No. That's probably during the market. I'm talking about before the market, on the pre-market, before you catch it. So because
go ahead.
Huh?
Go ahead.
No, I was gonna say as the market opens, right, you'll have people jumping in and out. So like in the beginning, like it's a bunch of them. I think like Ford jumped up high, had a pump and dump this morning, right? But at 4 o'clock this morning, it was only like 1,000 people in the whole in their whole little volume. So yeah, so in reality, you just have to wait for that pre-market. The first 5 minutes is the best minutes. If your stock goes straight down within that first 5 minutes, you can expect it to follow the trend. If it goes straight down within that first 5 minutes, if it goes straight up within that first 5 minutes, you could expect it to follow the trend. So just watching it like that. It's not going to be like that all day, but it's going to be on like that enough for you to make that 20% get out.
Booyah. Okay, where y'all at? What's up, Brandon? You in the backdrop? Okay.
You know me, Mo. I'm always in the cut.
Well, any information tips you can give to the newbies there so we talked about, so let me just kind of recap a little bit for you. So we talked about, getting your FinViz account that you can understand, that gives you information, so you can start doing your research. We threw out Yahoo Finance, Webull, Robinhood, TradeStation, and many other things out there. We also talked about doing some research in FinViz. Oh, one we didn't show yet was on BarChart, but that's with the options. We went to tip ranks. I'm in Black Box. What else? Which keyos can you add? This is in a preliminary stage, getting to know what's going on.
If anything, it's always stick to the basics. Go back, look at charts, read about technical analysis, see if you can match anything in the markets with technical analysis. The thesis that Oba talks about, come up with a good thesis for that particular stock for the day. Like Sonny alluded to, I think he was talking about. Give me 1 second. He was talking about 4, how I think Sonny said not enough volume was inside of
Right.
4. Well, you got to let it cook a little bit. You got to let the volume come into. If you stick to, I think, the NASDAQ and a little bit of the Russell, that volume is going to be baked in already. If you look at the NASDAQ right now, volume-wise, it's nothing less than, I want to say roughly 500,000 in volume-wise, baked into the actual NASDAQ, all that. If you can find me a stock that has relatively volume-wise less than 100,000, you prove me wrong, but that's why I stick to the NASDAQ. Russell, the Russell moves, but it doesn't move like the NASDAQ because everybody's in the NASDAQ, moves in and out. It's very volatile. So normally all the trades and all the stocks that you're looking at mostly fall underneath the NASDAQ. So find a thesis, look at your charts, come up with a fundamental thesis. A good fundamental thesis right now is, interest rates. So Sonny killing it on the SPY right now. He got his good thesis now, interest rates, the SPY is pulling back. Ukraine and Russia's is duking it out right now. This leads to a great, fundamental thesis. And from there, if you tie it in with your technical analysis, you can plot your support and resistance points. So if you do that, stay focused. Don't let the trade shake you out, because I got shaken out yesterday when the SPY did that crazy jump up.
Yeah.
I don't know if anybody's seen it. I got shaken out of that. I was like, oh, okay, I'm gonna get you back for this. I ain't gonna revenge trade. I ain't gonna tweak on that. I'm gonna get it back though. Best believe I'm gonna get it back. I lost like $50 off of that because I set my certain stops, but off of that, it boils down to the fundamentals. That's what it is. Sonny didn't do nothing but the basic bare minimum fundamentals, and he's able to pull off gains. Anybody else who does this trading things, it's purely fundamentals. And that's what you're doing at the end of the day. And this is what Oba talks about a lot. It comes down to the fundamentals. That's it. Now, if anybody want to go out there and expand their knowledge, real easy, real simple, turn on the TV, put on the business news, like I think it's Fox Business, as they're talking about charts and stocks and stuff like that. Understand that lingo and see what their analysis is and their fundamental analysis is. That's something I do religiously. Like I'm 20 minutes, probably like an hour late to work, just trying to get what these people on TV is talking about. Sometimes you can tell it's BS what they're talking about. They're going long on, a Peloton when good well they're not doing that. Like, no, like get out of here. Peloton is basically dead right now. I heard another guy talking about who was it? Under Armour. Under Armour is gone. I made a good little, $300 off of Under Armour. I mean, it's dead in the water by itself too, and it's got some room to,
Who is
to
it?
potentially-
Who, Brandon?
Under Armour, UAA.
Oh, I seen that in Black Box a second ago, I think.
Now look at that. Now, if you bag that out,
What you want me to do? Which
you know me, year to date or year. I like to look as and that's
Yeah,
another
me
thing.
too.
Look at it as a whole. Like the whole thing.
Oh, you want to do a year? This year to date. You want to do a year?
Do 5 years. Do 5 years. Let's
Mm.
look at the whole chart. Bag it all the way out. Hit that refresh button for me. Yep. So look, you still got room to grow on that. It still has potential opportunity to go down to the downside. Now, if you look at that, yep. Now, Mo, right quick, plot your support and resistance points.
But my support and resistance.
Yep.
Okay.
How long are you waiting until you see that it lines up? Like when you're looking at the 5-year chart, right?
Mhm.
Say for instance, if you're looking at it within the last 5 years, but the top don't match the bottom, or the middle don't match with the year to date, right? How do you build a concept on what's actually finna partake?
Okay, so when you say it doesn't match up, you mean in that particular moment for the start?
I'm
the
saying
stock?
like right now, like I'm looking at it right now. I could look at a bunch of stuff on there and see how it can match up, right?
Right.
But now, say you don't have that stuff on there, how would you know that it will match up? Like, say for instance, you just had it going from the last 5 years, you just had it going straight down, right? But then if you put 5 years before that, it just went all the way straight up, right? So if you was doing it within the past 5 years, how would you know how would you dictate what it's actually gonna do?
So what you're looking for your support and resistance points, and this is what Mo's doing right now. So if Mo goes to like the high of the actual stock itself, you can see the high was like at 52 and some change. Okay, that's potential possibility for the stock to reach to or go back to. Same concept as for the low. You scroll back, you look for the low. You got your high and you got your low. These are 2 points for the stock to potentially go. Now, I think what you're talking about, Sonny, is as points far as reference of what the stock could potentially do and go to and consolidate for a little bit. I don't know if that's what you're speaking about. So if you look at
Yeah. So in other words, this will be looked at for like what you'll do for a long term, right?
No. Yeah. Well, yes and no. So you can do this for the SPY almost, but she's doing it for Under Armour right now. So if you look at it right now, she's plotting all the points. She plotted for the high. She plotted for the low right now in this chart point. Now what she wants to do is she wants to, fine tune it a little bit more. So where the stock stopped at post right now, I think at 1605. If she puts a line right there, another line. You got it, Mo?
Oh, my bad. What'd you say, Brandon?
Oh, my fault. If you put a horizontal line at 1605.
Hello, everyone. It's been a long time. Shout out from Guyana. Oni.
What's up, girl?
Hey, how's it going?
Hey, Brandon.
Good.
Hold on. God darn it. My bad. Hold up.
Mo, you done fell asleep again?
Yeah,
I
she
didn't.
fell asleep.
No,
Nah,
I
but
didn't.
she on the phone with her boo.
Oh,
You know that. That's
Talk about pick up some jasmine rice.
oh. Hey, I see you, Mo.
I can't fool with y'all.
Mo, what you can
Brandon?
do, Mo, you can double click the line you're trying to place.
Yeah, help me.
No, you got it. And then you remember that gear? That gear right there in the middle? No. Yep. Click that. Go to coordinates. I mean, you
Man,
got it
why y'all ain't
already.
been show me how to do that?
I showed you this already.
Man, I ain't never did that before. Y'all been here.
I
Mo,
mean,
I
you
showed
ain't
you
really
this.
been around either, so
You ain't over
You
here,
ain't
got
been
me over
around.
here nervous. Over here trying to move that thing around where y'all fired. All right, got it.
you ain't
You know, you over there.
Thank you, Corey. Thank you, Corey.
She ain't been around the group for like 2 years now, so you know. Ever since you got your man, you've been disappearing. So you know, hey, you forget stuff.
Chris, wait a minute now, Chris. First you tell me I need a man. Now I get one. Now you mad. Don't be mad.
Dang, man, why you have to bring that up, bro?
I'm trying to be good. I'm trying to be good and supportive. Now you don't want me to be supportive. Now you got to make up your mind. Now you want me to be mean or you want me to be supportive?
Supportive.
Oh,
Thank you. I appreciate you, Chris. You're so awesome. He talking.
I'm gonna need you to be mean and supportive.
Okay, Sonny. God damn.
For me, to me, I need you to be mean and supportive to me so I can get the self-help I need. Some of us got a lazy stage, and I need you to get me out of my lazy stage.
You making that money. You need to help us out.
Yeah,
Man,
for real.
but this is
Stop.
long term. I am not touching none of this. I'm gonna be broke for the next 5 years. I ain't gonna touch nothing.
Y'all fired.
For real, dude.
Come on, Brandon. You teaching. Y'all getting
right.
off time. How you doing, Onique?
No,
I'm
you
good.
good, Mo. You good in my
I'm
book. Chris,
good.
let her get away for today.
It's been a
Yeah.
while. I'm in Guyana trying to
That's
figure out how to get online.
You in Guyana?
Guyana since December. Yeah.
Oh,
December
wow.
1st. Hanging out
Dang.
in the Caribbean. Yes, in the hot sun.
Nah, I'm gonna need you to log
Visiting
off.
or you moved?
I've
You
been out
said
of the
you
loop.
Nah,
Brandon
you gotta
said,
have some cold weather.
why are you there? You visiting? I mean, you live there, you got family there?
Yeah, I'm from here. Yeah, I haven't been home in like 40 something years. So I decided to come home and just kind of play catch up.
They don't abandon you by now, huh?
How many years you said?
40.
40, yeah, but 40 something years. Yeah, I haven't been home since I left.
Oh, girl, don't
So
nobody
it's
live
a
there
whole
no more.
new it's a whole new experience, you know. Yeah, all they want to do out here is party.
It's like this.
They got a dual citizenship out there, right?
Yeah.
Cool.
Yeah.
Did you
But it's
see?
hard. It's really hard to trade from here because some of the websites block me. I can't get on, and I'm trying to figure out a way around all that stuff.
No, I mean, can't you just use like Thinkorswim, like the platforms?
Yeah, I can use so far like Zoom, like for instance Zoom, like I can't click on my phone and come directly onto this link. In order for me to get on this link, I had to put the ID. I had to log into Zoom account and then put the ID, and I can't just click on the link and come in because it's blocking me. It's saying it's only for US. For US.
But you talk about from your phone or from the actual computer?
For my phone, I can't log into Zoom.
Oh wow!
Directly from the link. Yeah.
Or you can probably look at an app called Pure VPN. You can put it on your computer and your and your phone. It allows you
Was it
to
called?
come from
Was it
another
called
country. Pure,
Pure?
yeah, PURE VPN.
Mm-hmm. Okay.
Or you can use the
Okay.
Opera browser. Try to put the Opera browser on it. It has a VPN built into it. So you can say, hey,
Okay.
come from, make it pretend you're coming from Washington, D.C. or something.
Opera,
Oh,
like
okay.
Which website is that? Or what?
Opera is a browser, but you can use Pure VPN is the VP. What do you call it? Is the VPN that you can use?
Okay.
Yeah, it's a private network, so
Yeah.
you can they can't track what you're doing on a VPN.
Yeah,
So would I have to clear all my cookies and everything before using it? Or would it still pick up the IP address?
No.
Uh-uh.
Okay.
You tell it where you want to. You say, hey, I want to connect from Germany, or I want to connect from Idaho. You just tell it where you connect. You say, hey, this is where I'm coming from.
Right.
Okay, good. Okay, I'll check it out. Thank you.
No problem.
Okay, Brandon, back on you.
Yeah, what was that?
Well, Brandon made a 300 on Under Armour.
Man, you know it.
That's what
I got it at. Where I get it at? I got it at 27. Yeah, 27. Well, I think 27.17.
You got options?
That's a
Yeah, I did
swing
the
put.
options with it.
Swing put. Oh, okay. Hell yeah, that's what's up.
Dang.
And I'm doing the same method as Sonny. I'm trading right out of my Roth IRA. I'm not touching this. Oh yeah, so Sonny was talking about trying to find the certain points to I guess to map it out, your trades. And I think there's a YouTube video that we have in our little chat or our little Discord or whatever that talks about actually, Mo, you actually had it. You showed us this video before. What is it called? Resistance points and support points.
Yeah.
Where you got to find 3 support points. I'm sorry.
Go ahead, Brandon.
No, you got to find 3 support and resistance points, and the actual candle or the wick can actually or touch on the certain line. And if you look at it from here, it doesn't have to be exact, but if you look at it from right here, you can see back in between July 2018 and then July 2019.
We reject.
Yep, it jumps off of that. And then actually in 2020 July, it goes through, it breaks down, and then all the way down, and it goes back up. It consolidates a little bit right there, and then it goes back up, and then it hits that 27.45. It hits it 3 times. It fell on the 3rd time, and look where it's at right now. Now this is for the long-term perspective. Yep, right there. Now, I think you can do it. Well, I know you can, but if you zoom in probably like on a weekly or like 5 days and do the same exact process, you're able to map out certain trades. So like, yeah, what Mo just had right there. You got, and Mo, what is that right there? What is that called right there? Those 3, what is that called?
That head and shoulder?
Yep, there you go. Head and shoulder pattern.
Well,
Head and shoulders. Head and shoulder pattern is a sign of what? Is that bullish or bearish?
obviously it's bearish because it pulled back.
All the way back.
Mm-hmm.
And from here, you can just map out your trades and come up with a thesis. Obviously, the market's falling right now. How does that affect Under Armour? Evidently, you can see off the chart, the stock is done, completely done. I mean, is it possible for Under Armour to catch a good rebound? I mean, we don't know yet, but far as what we see right now, the stock is done. I mean, it has to get back to the level of, go back to year to day.
Hold on.
I'm sorry, 5 years. The stock has to go back to possibly was at 1151 or bounce off of that good support line.
Oh yeah, in order to.
Yep, jump right back up.
Mhm.
And it has to be a great pivot off of that line too.
Yeah, because that's a. Yep.
So you say you start creating your support and resistance lines using the weekly over 5 year period.
So what I do is, if it's in my Roth IRA, I do a 5 year. Like, it's crazy because you remember how when you first started off learning about stocks and everything like that, you see people with all these lines on the chart. Well, that's me
Yeah.
when I'm looking at the 5 year. You know,
That's
that's
me.
yep. I do that relentlessly every time I look at a chart. And then I start going in and in. So I start off with 5 years, and then I might jump to year to date, and then I might look at a 6 months or 3 months. And then, you know, if I'm good with it, I go to 5 days and see if I can find like a quick short move for an option play, or if I just want to buy the stock itself.
Mm-hmm.
Oh, sweet.
Yeah, because I started out here, and then of course, if you're looking at it, you know, your stocks on a day, you know, your lines are gonna go. You do the horizontal because it's always gonna show up, and
Right.
and if let's say it did
Mhm.
it to have a bullish move, right? As you move up, as this stock moved up, your lines will start to appear again, so you'll know where your support and resistance is still at as it goes. That's what I did with Ford, and I could see the move the entire time. When I made when I sold it at the $25 mark, I knew it was time for me to get out at that point because it really had passed. I had all those lines. Let me see if they come up. All those lines on the chart. Oh, this is not the same system. I wasn't on this system. I was on another one. I gotta find my password.
And
I was
it's
on a
crazy
different
too.
account.
Or what you can do is you can take a line and put it across all the highs.
Uh-huh.
And what I do sometimes, what I do is I take a Fibonacci and I'll find the optimal trade entry to get in based off that Fibonacci, whether it's upward or downward trend.
Now I'm not good with the Fibonacci yet. I can't help you on that one.
Yeah, you can. Well, bust out that Fibonacci. Grab that Fibonacci over there.
It's
Okay.
really not hard, Mom, at
Yeah.
all.
I'm
It's
not.
the best thing.
I'm just not getting it. It just doesn't. My mind just not.
You know,
This is
So
right.
for me, for the Fibonacci, with that, you know, gives me an ideal of a good entry point and exit point for my actual stocks. So if you grab it all the way to the right, that the tallest point, yep, and drag it down to that consolidation to your left.
I don't even know how to use it.
What's that right
you
there?
ain't even got it, Mom. What is you doing?
I
Delete
don't
that.
What is that? All right. Oh,
Oh, so you had it. You had it.
There you go, right there. Look at you.
now what I do?
You got
Now
8
drag it all the way
different
to that consolidation point to your left.
Oh, right here.
Yep. And put it on the wick. Yep. Keep stretching it. Keep stretching it a little bit.
Some more.
Yep.
It's still
Right
this
there.
still Under Armour.
Yeah, this still right
Now stretch that all the way to the left.
here.
Yep. Yep. Keep going. You got it. Keep going. Go stretch it all the way. Yep. Right there. That's good. Now let's. Oh,
You
go
can
ahead.
change, so you can change the numbers. So what I do is not to cut Brandon off. I normally put OTE, like that's like the middle for me. That's the best trade, or not the best trade. That's kind of like the typical trade entry somebody would get in at, depending on, you know, the up or down trend. So you can go from, okay, let's say you it's an upward move, right? So you will want the trade entry to be like for this right here. You would want to get in at the lowest point you can, but you ain't gonna always catch the low every time. So that's why it's called the optimal trade entry. So you get in right before it take off. So I will pull this this Fibonacci down. And what time frame this is on? Oh, this is a weekly. Okay. So I would do start off with a 4 hour, then a 1 hour, then a 30 minute, and then a 5 minute. And you can just squeeze it in.
Yeah.
And see, you start on the bigger time frame to get more of a picture of what's going on with this particular asset. And then once you go down time frames, then you can start finding where you need to get in at. It's just to give you an overview of what you're looking at and what this asset is doing. So you can go down to a 30 minute. See what the 30 minute look like. No comment. All right. All you doing is scrunching, and then zoom in.
Okay. I don't want to make it work.
It's getting wider now, so okay, and just zoom in on that, yeah, right there, and then just try to bring the Fibonacci in. Dang, what is that?
Hold on, Mo. You're gonna have to delete the Fibonacci because you're doing it on a different time frame.
Yeah, and bring it back in.
How do I do?
So click on the actual fib. Or click on the line of the fib.
Yeah.
No. Go up a little bit. Green. Yeah.
Right here.
Yep. Click that, and then hit delete.
There you go.
On it for hours. Yeah. Okay. Wait,
So
you put the Fibonacci on this one?
No, put it on the high. You gotta put it on the highest high.
This the 4 hour. You want to go back to 30 minutes?
Yeah, go down. You can go down 30 minutes.
Okay. Put it here.
So you will pull that down. Can you zoom in a little bit before you?
I don't have it. Oh, zoom. Like that.
I mean, not zoom out. I mean, zoom in.
That.
Yeah.
I'll do it.
Now you can put the fib up there now.
I forgot how to do it. Oh, there you go.
There you go. And just pull it all the way down. Yeah, right there. All the way down to that bottom candle right there. It's to the right.
Oh, stop it right there.
Yeah, that bottom red candle. Okay, and make sure you pull the bottom up to that red candle.
Gotta figure out how to do it. Oh,
no, you had the top right.
Yeah, well, I have to figure out where the bottom at.
It's the maroon one at the bottom. Yeah, just pull it up to the red candle.
It doesn't work. Where's the? I told y'all I ain't know how to work this thing. I'll try.
It's really the colors, Mo. That's making this.
I touched that color.
That's why I don't like all these different colors. I just use yellow. That way, You can. It's bright enough, and you can see everything because it's a black background.
I can't.
Oh, wait till
Okay,
you hold. Wait till you see the hand, and then press it and hold it, and then pull it up. Now press it and hold it.
Oh.
yeah.
Oh, wait a
All
minute.
right, so go right there to that bottom red candle.
Oh shoot. I gotta get. Okay, wait a minute.
Don't worry about it, Mo. Don't worry.
I have to learn. Stop it. Let me squeeze it like that first. Okay, there we go. Now I need to make it go down to. See, I don't have a little bottom blue. Oh, maybe I had it upside down. Yeah, that must be what it was. I had it upside down. Like that?
Let me see.
Like that?
Yes. Yes. So what you would do is, well, what I normally do is I change these numbers right here. I change the numbers because I do like a 0 to 100%. And so the 100% would be like the best entry you can get, whether it's on a downtrend or uptrend. That's like, the sweet spot. You got it. You catching you're gonna catch a big move from that. But you can't really time that. That's just, if you're really good at it, then you can get it. The optimal entry is like, okay, you can get in right here, it's safe, and you still gonna make money. I learned this from ICT. So he normally put up the fibs, and he put it up to the highest high and down to the lowest low. And so once you get in here, I don't like these boxes either. I don't want it's based off these numbers. But so during this downtrend right here, you can do like 100 down to a 0, 100 at the top, 0 at the bottom. And then the optimal trade entry will be like the halfway point. And at that halfway point, that would be your sweet spot to get in.
Oh, I'm just gonna leave this alone.
That's okay. That's okay, Mo.
Working out.
No, how dare you, Mo? You better keep working. Keep going.
Right there. There you go. Right there.
Look at that. Bye.
There you go. Now you got it.
Damn it. All right. Now, I don't know what you're talking about. I just know you said.
So you see the number at the top, right? That blue box. The
Yep.
blue box at the top. That
Yep.
will be considered, the best entry you will ever get in life.
Right here?
Yeah, so you catching it from all the way at the top. That means you caught it at the top and you finna eat all the way down. That's like the best entry you could get. But that don't mean you're gonna be able to do it because you don't know what's gonna happen afterwards. So that's the best entry you can get. And then of course the bottom is like, why the hell would you try to short sale right there?
So if you put the
wrong
today.
Huh?
So when would you use the Fibonacci?
You use the Fibonacci, you use it on bigger time frames. And then once you put it on a smaller time frame, then you can execute the trade. You're looking to find points where you can enter in at. So the Fibonacci, what it does is it helps you pick the best entry to get in. Or this is how ICT uses it. So on this example right here, the best entry, of course, is going to be at the top, but you can't predict the top. You can only say that's a good entry because of what you see on the screen, on the chart. So the optimal entry, that's where you can get in and still make enough money. You know what I mean? So the optimal entry will be like 50%.
Oh, so that's this right
here. So looking at these numbers right here, you can't really tell. Yeah, so 0.5, whatever. Let's say that's 50%. That would be, your optimal entry to get in. And look, it's right on that big red candle coming down. So that big dump, he would tell you that That's all you would need. You can get in right there and then get out. You wouldn't need to do nothing else. It's not about catching a whole move all the way down. It's about getting the right entry and practicing getting the right entry for a trade. It's not about making, $500 or $8,000. It's not about that. It's about, picking the right spots to get in at, setting up your trade perfectly. That's why he calls it trade setups. Because you wanna get in at the right time to get profit. Not saying you're gonna make $1,000 off the move, but you will make some money. It's just teaching you to consistently pick trades to get in and make your money. It's consistency. That's all it is. And you might be wrong sometimes. That's the reality of it. But majority of the times, you have a trade set up and you pick the optimal trade entry, you're gonna make money. Not based off, let me get at the top and then the fucking trade turn around and go higher and you thought it was going lower. Don't work like that. That's why he asks you to use bigger time frames. That way you can see what's going on. You can see the bigger picture of what's going on with that asset. Then you go down to small time frames and make a determination. Okay, well, I can trade this because this is where it's going. This is the trend that's going in. And then once you get down to the actual time frame you want to trade on, then that's where you use that Fibonacci and use to get your optimal trade entry. Matter of fact, let me find a picture, because I got pictures of how I had my charts. That way we get a better idea.
You trying to?
No, I ain't got to share my screen. I'm just gonna drop it in the back chat.
That was definitely great the way you explained that too. I wanted to tell you that because when I was asking you the question earlier, I look at it on that time frame. But when I was asking you the questions earlier, you basically asked.
Okay, that's what's up. Appreciate
and notice mode that you going from top to right. That's a potential short or put.
Right.
And then once you go top to left, that's potentially long, or what do you think the actual stock might do? Or where it might bounce, or what's a good entry to get into?
Correct.
So we would be saying that right here would be a good entry. We'll wait for that.
Well, you would look at the middle right there. So the 0.5, that would be a good optimal entry on the short. Now, see, you can look at the top and be like, oh, well, I missed all of this. It ain't about that. It ain't about what you missed. We trying to get you in a perfect setup, which is your optimal trade entry. So you want to, huh?
In this case, it's already pulled back. Is at $15 or $16.05.
But look at the candle. Look at the candle where the 0.5 is. It's at that second candle on the downtrend.
Right.
So coming off that high right there, that second candle pulling back, and then what you see it do, it falls. It falls, and you can be happy knowing that you caught that trade instead of just catching it all the way at the top, because that's what people gonna say. Retail traders be like, well, why you didn't buy it at the top? It's not about buying it at the top. It's about getting into the trade and mapping it out, giving you the best chance to make money, because you're not going to catch the top every time. Normal people just not that good to do that. So you caught it on the third wave. So it failed twice already. It failed twice. It failed twice. You caught it on the third wave, and then you caught it on the second candle according to the optimal trade entry. And what did it do? It fell again. And then what? It retraced, went up, and then it pulled back for a last time, which will be today. So
So if you
Your
was to,
thesis work.
so if
Huh?
you were today and
Mhm.
it's at $10.05, would you put the Fibonacci? You'd move it.
Yeah. So what you could do is, you see how you got it on the high right now?
Right.
So you can just move the Fibonacci back down to the second high or the lower high. And you just move it down, move it down, move it down
Yeah.
every time. Because it ain't it.
So
Well,
basically,
low. Yeah. So you would just move the Fibonacci down each on each one.
Hey Mo,
And it's
go ahead. My fault, Chris. Mo, go ahead, put it back where it was, and move the whole chart itself. Don't grab it at that point. You can move the whole chart. So grab one of the lines.
like this.
Yep, there you go, and move it straight down. You
Yeah.
should be able to move it straight down.
Yep. Just like that. Boom. And see, you would just put it on every high on each candle as it keeps going down. And that would just keep mapping out your trade. You know what I'm saying? And this is on a 4 hour. So guess what it's gonna look like on a 5 minute or the 30 minute. It just gives you more details on what you need to see. And typically, people don't do this, looking on bigger time frames and then going down. Then you start finding your niche, hitting the trades. And it's not to say that you're gonna win every time. That's not what this is about. It's about making a consistent trade setup. Getting into the habit of looking at different time frames and picking your entries and getting the best entry you can get. So you would just go to every lower high, every lower high, every lower high, or higher low, whatever the case is. And then you would use like I said, the optimal trade entry. That will be your middle of the ground. So that will be the optimal for you to get in. You can get in a little bit higher, a little bit lower, depending on which way it's going, but that comes with time and mastery of the skill. Like I said, I didn't learn on, well, get in at the top and then you sell at the bottom. No, I didn't learn that. He teaches, this is where you aim at. If you can get in a little bit higher or a little bit lower, cool. But this is where you need to be at, the middle of the ground, what they call equilibrium. And then you take that, and you get into the trade. And you live with the results. But that's why that Fibonacci is so key, because it helps you find the middle of the road for you to get in a trade. If you ain't, mastered the science of the charts yet.
Hey, Brandon, what you was gonna add?
No, I was gonna say, so Chris's strategy is perfect for, trying to find short moves to the downside and potentially longer moves to the downside as well. What I was gonna tell the people, like for those who's trying to, start, as far as trying to find which stock is the stock to pick for the long term. Well, you can go to any stock and use this fib or use the levels that we have, or do support and resistance. So if you go to, like, I don't know, pick a stock that you like. So like Best Buy, something like, if you threw Best Buy up right quick.
This also works for, bullish moves as well. It's just the exact opposite. It's the flip side.
And then I don't know if you guys remember the video that we did where I said I was Christmas shopping for these stocks. I really am. So, and I'm using fib to do it. So, you know me, I like to use like the 5 year, the long term, or the bigger, the whole scope of the stock. And if you go to like the 5 year, of the whole stock,
Where
Is
you
that the
want me
whole
to go?
stock? 5 year?
What's the 5 year?
Can you see the tail end of it too? Like the whole stock itself.
Mm,
So if you hit like the little refresh button,
cool. Okay.
okay, and then you use that fib, or if you want to, you can plot out some points using support and resistance.
Okay, so I'm going from here.
Yep, go all the way down to the
Here.
lowest point, which should be all the way to the left.
There.
Nope, stretch it out though. You got to stretch it out.
Hold on.
Up all the way.
Okay.
Yep, and do the same thing to the other side of the actual chart.
Like this.
Yep, keep stretching across. And what you're looking for in long-term stocks is you're looking for a mass amount of discounts. So far as Best Buy right now, it's still in the green, which is not good. I mean, it's you want a good discount. So my Fibonacci retracement levels is going to be like that 20, 23 points. I think it's 8. What's the other one? Yeah, 38.2 or 0.38. These are good, basically the green, all the green, for good levels of entries for long-term purposes. So if it so happens to hit this level, I know where I'm buying mine at. So if you bring up Apple,
What Chris was talking about earlier, this 0.5, this would have been a good buy point, right? And then the 0.3, right? Know what you're saying?
Well, yeah, but I think that's his thesis for a put or short selling or
Gotcha.
catching a move to the downside.
Gotcha.
Mine
Well,
is
no,
actually
well, you can
up.
use that. You can use it both ways, is what I'm saying. So,
Yeah.
what you would do is you would just flip the numbers on it. So, instead of the 100 being at the top, you would put the 100 at the bottom on a bullish trade or a trade that's going up. So, I don't know where she got the numbers in on this. Yeah, so it's the same thing right here. It would apply right here. You would put you will line up the Fibonacci on the high and the lows. So you got to make sure you pull up. You got to make sure you put the fib on the high. So on the top of that wick, and then the bottom down here on that wick. You got to make sure it's lined up like that, because that can mess up your entries. So you always put it on the highs and always put it on the low. The lowest low. The lowest low and the highest high.
Good, Brandon.
Oh no, okay. So for this Best Buy right here, right now, we have, where's it at right now?
Is it, you talking about what it closed at? 88?
Yep, 88.
67? Yeah, 88, 67.
I also noticed that I also noticed that you have a EMA there, or EMA. What EMA is that for?
EMA?
Moving average.
200.
Oh, that's average. Yeah, 200.
Okay, so this stock retracing all the way back down to the 200 level. My question is to you: you think Best Buy is going anywhere?
Nope.
Okay, that's
So
one part of my thesis.
Ain't gonna bounce up that 200?
Now, remind you, this Best Buy runs off the SPY basically, right? Or the Qs, since it's a technology company. What have the Qs been doing lately?
Oh, I thought
Getting the brakes beat off of it.
Right.
down.
Qs are being, as
Pulling back.
Oba AE say, the Qs are here the crows or in the crow's nest or whatever. I mean, I still see potential, downside for this particular stock. Again, I'm shooting for the green at the bottom. I'm shooting for the light green. I'm shooting for 0.382 If I get my entry at 0.382, I don't care if it goes all the way down to 3.6 or whatever. I'm gonna get a share there. I'm gonna get another share at the bottom, and as it comes back up, I'm gonna get another share there. Then when it hits my other target again, I'm gonna get another share at 38.2. So those 4 shares I got into Best Buy off of my fundamental long-term analysis.
Gotcha.
Now again, I mean, like this stock does have potential to go to zero. I don't think it will. I don't know. Do you guys, Best Buy is gonna go to zero? You guys think Target's gonna go to zero?
Yeah, no time soon.
Anybody think what's that? You guys think, Costco's going to zero? Actually, pull up Costco's right now for me. I want to see if that's a good discount. Camo.
Wait,
what's going on, family? What's going on, everybody? I just came out of a training session.
What's going on? How you doing, bro?
COSTCO.
Very busy day. Y'all getting it in. I love it. I'm listening as always.
There you go, right there. Yeah, Costco, that's one of my favorite companies.
Yeah, that definitely is nice.
Yeah.
Look at that, Mo. Don't throw the fib on it.
I'm learning. I'm learning.
Now make sure you pull it to the lowest low and the highest high every time.
Now remind you, you got this is my long year thesis on this. So you have to go through how many years? 5 years for me.
I'm on 5 years.
Okay.
How long is your thesis on this?
But move.
Long term, Sonny.
Yeah, I know long term, but like say for instance, is it long term as far as 2 years, 3 years, 10 years? Like that's what I mean by that. Like how long is it? Are you planning it out to do?
What it over AE? Would you tell them how long we hold these stocks? Don't hold the stock.
10 years. Don't buy it.
Exactly.
What Warren Buffett say?
Don't buy it if you don't
Right.
Well, he says different things because it's based on what kind of stock it is. Because if it's a stock you love, it doesn't matter what the price is or what the outcome is. So that's the difference.
Well, I mean,
He's
far
just
as
talking
holding
about
the
it.
stock. Yeah, holding the stock.
And then again, Sonny, we're not here to love these stocks though. At the end of the day, I mean, like you can hold on to the stock, however how long, but I mean, Oba always says, we rent and we release.
Well, Oba on here, what you got to say about that, Oba AE?
Go on, get them.
Well, I'm late. I'm just coming in. Like I said, I'm in listening and learn more like we always do, because y'all know my approach to this is always, from a peer-centric perspective, because we're all thinking together to figure out the best ways to be secure in our convictions, right? As with any trader, you're only as good as the information that's afforded to you, right? Or how well you can unpack it or, basically, dissect it. And of course, this is the natural regimen of going through figuring out, how to pretty much how to value or how to at least put value in perspective, right? When you look at these certain stocks, these assets, of course, you guys have the Costco chart up right now. And of course, I don't know exactly what you guys were speaking about before I came in, but
Fibonacci.
I just say, outside of the Fibonacci bands, just whether or not you're trying to track the value of potential growth in some of these stocks, depends on where they are, what sector they may be in, what industry, whatever. And you're just trying to diagram in the charts, in terms of what the stock is at its current level, where it could potentially go. So as with any investment, you want to ask yourself again, number one, what are you willing to pay for it? Number two, and at what price, meaning that valuation of it, that seems to be attractive to you as the buyer. And of course, given the fact that we know the nature of the markets are now in a pullback status because of, we hit a point of, peak valuation or peak buying frenzy and now they're starting to kind of, dissipate a little bit. The first thing you ask yourself, okay, given opportunity, if you had a chance to buy this stock from the very beginning, where would you, have loved to buy the stock? Well, first and foremost, person would say, of course, I would have loved to buy it, at zero, right? But we know that's not the case, right?
Yeah.
That's not the case. So you say to yourself, okay, well, if I put this stock into a perspective, of course, you guys got the Fibonacci bands up at this point here. This is showing you what they call universal points or pivot points, where the markets are typically programmed to buy, not just the average individual mom and pop investor, but also algorithms. Why? Because they read these certain levels of pivot points as to be major points of what support or resistance points, right? So clearly you see Costco here, just using this as a quick diagram. Just want to be brief. The most notable, Fibonacci sequence or pivot point that's, up for debate in terms of it potentially coming back down to either test it or be close to it, or what we consider to be a discount buy would be the 0.78, right? 0.78 fib right here. That puts you at around around about like four. Actually, you see it's close to that now. Where is it? About 494. Yeah, about 494.
494.
494. And the first thing you see in that moment is what? Clear as day. You see what they call some buying and or support point there. It's some buying and selling at a point where it started to have a little, I guess you want to call that a meeting at the bar where people was kind of excited about, this stock at that level, right? So you say to yourself, okay, well, it's off the high of 460. If it comes down to 480, or 494, given its peak to trough perspective, that may be an attractive area for some people to buy who still like the stock at a discount from, let's say, at the natural peak, right? And they just got dry powder. They want to add into the value of considerably what would be the pivot points, right? You're playing it strictly off the fact that it's going to hit a pivot point. And pivot points on any drawdown above, let's say 20%, 20 to 30% on the individual asset seems to be a logical area to buy into your position, or dollar cost average in, right? Now, with notwithstanding that thesis alone, you ask yourself a very simple question. Do you feel like there's more headwinds in the market than tailwinds at this moment? Because that has to be your next order of operation within your methodology to figure out what's value, or what's at a value price given all the different variables, right? Again, we say the what, the why, the where, and the when, right? Mm-hmm. What you're buying, why you're buying, where you're thinking about buying, and when to actually pull that trigger, right? You can, make it make sense from that perspective. So that becomes a very vital, a vital, piece of data to understand. Are there more headwinds in Costco, or are there more tailwinds? And that's a question I just posed to you guys. Do y'all feel like there's more headwinds coming up for Costco here shortly, or are there more tailwinds?
Headwinds meaning what? Tailwinds meaning?
Headwinds meaning there are more problems coming for the actual, not just the stock individual, but the sector that may be in, the overall market as a whole, and how that would affect this company or this stock individually.
I would say tailwinds because Costco's consumer staple.
Right, so you say consumer staple. So that would be so you'll do, as I like to do, I'll do like a pros and cons kind of box, right? So if you put that'll be in the pros, right? It's right? We'll just put like CS, right? Consumer staples, right? Though that means it has items, within this portfolio or its business model that people have to use mostly on a daily basis, right? Mm-hmm. Consumer staple items, right? Toothbrush, paper towels, toilet paper, right?
Right.
Food items, they sell all that in there, right? So it has a use case where it's used more than average, right? A ubiquitous use case, as I like to say, right? So that would be a positive or a pro, right? That actually, fuse the ideal of the tailwind, right?
Right.
Right. So what would be a headwind?
Headwind is inflation, higher prices, in which I paid today.
Right.
Right. Water went from $2.99 to $3.39.
Makes sense.
Yeah. You got to spend though. Yeah.
Right. So you got to pay to play, right? So inflation is something that's going to be, actually here for a little while until they figure out where to put the genie back in the bottle, right? Now let me ask you a question: is that inflation headwind more drastic than the consumer staple model or ubiquitous nature of Costco from a tailwind perspective? Which one carries more weight, that headwind of inflation or the fact that it's just consumer staple stock that people still will buy the items enough to kind of help the stock out?
Consumer staples, because like you said, people go, it's a necessity. People need, have a need to buy water, buy paper towels, buy food. So, they just gonna have to spend more. That's just the reality of it.
Now, here's my next question, and I don't mean to cut your wisdom over.
No, you good. You good.
On the average basis, how many people have access to Costco as opposed to Walmart?
Ooh,
Hey, that's what I'm about to say.
I was gonna say Target too.
Yeah.
Well, I think Walmart will have more customers, but who's gonna be saving more money in the long run? I still think Costco will, because Walmart, they run out of stuff. Costco don't run out of nothing.
Well,
yeah, but when it comes,
go ahead.
Now price wise, Walmart does have more customers, but Costco caters to, and see, Walmart has everything, right? They got electronics, this and that. Costco, has that stuff too, but it's specific for its members that spend that type of money anyway on bulk items. So
I think that'd be
Walmart has the most customers.
Wouldn't that be a negative though?
What?
You have to have a membership to get into Costco to pay for big bulky items versus going to Walmart where you can grab like a chair or a desk for,
Well,
19
Walmart
bucks.
got Sam's Club too. So they both still have the same thing. But what I'm saying is if we weren't about Costco's membership that you got to pay and then higher prices and Walmart having more customers, so to speak, I think, if it came down to it, I think Walmart would get overcrowded and they would lose a lot more products than Costco would, because they got minimal people on this side. And they be prone to running out of more stuff, like right now.
But I think when it comes to that membership, people will drop that fast. If inflation rises to unprecedented amounts, people gonna drop that Costco membership fast and head over to Walmart for cheaper prices. That's what I would think.
I don't know if they will head over to Walmart, because you still got Kroger's, and then you got other private business grocery stores as well. So to me, Walmart is not like a grocery store to me. It's like a everything store. So, they may have good prices on certain things, but I wouldn't go to Walmart to get organic stuff. I wouldn't go to Walmart to look for, natural items like organic peanuts and all that stuff. I'm not going to Walmart for that.
Yeah.
I would go to Kroger for that over Walmart. So
when your pockets are burning, you don't care where you're going. You're going to Walmart because it got the cheapest price, right? You don't care about
but that's kind of like anecdotal, and then you got to find out. Well, if people who got money, they already used to spending anyway. So spending the extra 20, 30 cents, they be like, well, it's still kind of high. But whoever they're gonna be loyal to, they're gonna be loyal to. We always find money to spend.
No doubt.
I think that.
But I agree with that.
Well,
I agree with both sides.
One thing that nobody chimed in on is it's actually a discount shopping at Costco, because most of the people that got memberships spend a lot, and if you have a lot to spend, usually you get things in bulk, so you don't have to keep going back and forth to the store. Because a lot of the Costco's that's out here in California, most of their REIT companies are in your middle class and higher class areas. They don't have any Costco's and any Watts or Compton or nothing like that out here.
Yeah,
so
that's true.
Different.
That's true. Versus Walmart's is in those neighborhoods though.
Yeah,
Walmart has no fear going in those neighborhoods and setting up shop. You got that in
I agree with
Chicago.
That. Yeah, I agree with that.
And I think
they're gonna always have more customers. That's easily, that's a pro for Walmart. But
Chris, my fault. You spoke about loyalty over over the dollar. Well, I mean, if your family's hungry, you ain't gonna be loyal to Costco because your family's hungry. You need to find, food, and I get it. Like you want the best food for your family, but If that dollar is stretched
Uh-huh.
and Costco ain't hitting it for you, it's
Yeah.
either Dominex or Target or what. You're gonna find some store that's cost efficient versus Costco.
Right. And I don't disagree with that. Now, just looking at them both, like I said, if it came to that point to where you gotta feed your family, you can't get in Costco because you gotta feed your family. You gotta have a membership. Now, Walmart, you got to fight 3 and 4 people to get in there and get something.
That's facts. That's facts, though. You do. Give me straight beans.
But no, y'all are right. I definitely agree. I don't disagree with nothing. It's pros and cons on both sides. I see both. I agree with everything y'all saying because it's right. Walmart gonna have the most customers automatically, and they don't have to pay a membership. It's free to get in. So, absolutely.
And in that moment, for the most part, you guys just went through a round robin of think tank and trying to figure out what are the pros and cons in that perspective, right?
Yeah.
And so when you outlined that the centric value of what that means for us, Costco and Costco only, we use Walmart as a case study, but it could be anybody, right, that has that kind of same business model, because that's how you would fare it up against, right, or contrast it against, like a Target. I think Open Brandon spoke about that. They have, of course, Target don't have a membership, but they have both sides of the aisle, right? Grocery and homeware and this, that, and the third.
Yeah.
So those things come into fruition when you're making that assessment based upon valuations, right? In terms of whether or not if it's fair value or it's not, based upon a lot of those different factors within the tailwinds and the headwinds. And we still got to factor in broader market sentiment too, right? Because broader market sentiment obviously is the pulling force that pulls markets, stocks, individual stocks, no matter their use case or not. If there's what they consider to be what they call like an algo search and seizure at this point, that's basically what's happening. Algos are searching out these stocks that are at or near their 52-week highs, and they're taking those guys out first, right? They're bringing them down to the point where they will be considered to be fair value far as completely oversold prospective bounces, and then they'll go forward and maybe saying we'll pad that. Now looking at the RSI right here on Costco here, and this is the weekly chart.
Yeah.
If you look at the RSI here, the RSI is basically sitting right at 50, right? It's sitting right at that 50 that 50 pivot point on the red of the sliding index. So technically on the weekly, you say okay, well, it has the propensity to go 50% lower, right? Or it has a propensity to bounce and go 50% higher, right? In this case, closer back towards 52-week high, which is around that 460 area, right? So it's closer to its 52-week high now than it will be at a pivot point or a particular attractive buy pivot point. Does that make sense a little bit? Right? The markets will be planted in essence to say, well, okay, yeah, those things are great. Are they fare well or bode well for a consumer staple stock like Costco because of its use case perspective? Now, it's not centric to where it was during COVID. Why? Because it was deemed to be an essential store, right? People didn't have a choice, right? They only had certain stores that was open. So it benefited the most because of its luxury of having bulk items, right? It was able to be a comparable value for people who wanted to buy, boatloads of toilet paper, paper towels, whatever. They were deemed essential. Now it's not deemed essential. Other stores are open now because we're in the reopening phase. Even in the consumer staple environment where high inflation costs become a big issue, they'll do just like what your guys were saying. They will go shop at the cheaper place because their prices are just high. And everybody don't have, a membership at Costco. So, that's the kind of, the ebb and flow, how you have to play that. You want higher foot traffic or you want a quality of buyer, right? I think Oberson will speak about your bulk buying, things of that nature.
Yeah.
What's that trade-off? In most cases, in any kind of aspect of retail, most stores benefit off what? Foot traffic, right? Hence, that's what made Walmart such a great environment, right? Not that Walmart would be a comparable value, even though they are to a degree, but it was just a case study.
It's
right?
the
So
meat right here. Yeah, you get to the meat.
Right.
It's the meat.
See, so it'll help us figure out exactly what are those odds, right? We use a probability to come up with a thesis to say whether or not this is a good value buy here, or does it have potential to go lower. At any aspect as an investor, I want everybody to realize this, everybody to know this, and everybody to stand on this square here. The first and foremost outlook with any stock is to realize that it's already overpriced. Why? Because if you think that it's not, you know, you'll be willing to pay for it at prices where on average, if you can get it cheaper or you take the stingy route, you'll be a little bit more control before you spend or buy any stock. You'll go into it with that discipline saying, you know what? Now, I think this thing's still a little too expensive. You'll be a little bit hesitant. You will have to get a lot of different deciding factors to make you pull that trigger, as opposed to saying, okay, yeah, it pulled back 10%. I think it needs to bounce here just because it needs to bounce because it fell 10%. But again, given the fact that the broader market may also be pulling the market down too, you know as well as I know, you guys definitely know as well as I know, it can go a lot lower, right? Depending on where it's at on its technical analysis, beyond that of its fundamental value, right? And the market sentiment, the investor sentiment aspect of the market when people begin to capitulate. They're gonna sell their biggest winners first, or they'll be more reluctant to sell their biggest winners first, as opposed to worrying about the stocks that are already basically ain't making no money or they already lose, right? They'll trim those bigger positions first to add money to the lesser ones, if they could, right? Because it already made such a substantial move, right? Given that of just using, of course, Costco here as the case study here. So then it becomes a game of, okay, let me put some fundamental respect on this name. Hence, we just did that, just kind of using a roundabout way of saying what's the pros and cons of the stock, right? Then you go towards, you get towards more of the technical aspect of it, right? So we went through the what and the why. Now we at the where and the when. Clearly, at that pivot point you see me that I drew right here, that's a massive area where you're gonna have consolidation, accumulation, right? So that's some strong buyers there, right? That people held at that point. Of course, the stock, pivoted there substantially. If it tests those guys and those guys can't hold, what's going to happen? If the broader market is also coming down, that means eventually it's going to It's going to take out those guys that probably have stop losses and eventually has the ability to go lower, right? So anytime you have a massive correction in markets that are being pulled down by broader market sentiment and not just an individual sector in itself, because this is a twofold in this case, because Costco, even though it's in a consumer staple, the XLY, whatever, all right, and also in the XLP, right? It's consumer discretionary and consumer staple, but it also is somewhat tech centric too, right? Because of their logistical framework. So they have vestiges of also being looked at somewhat like a NASDAQ or QQQ in the same breath to a degree. Now, it's funny how these stocks have that kind of similarity, right? So it'll also, have waning value based upon those stocks coming down as well, right? Or if they say the retail consumer, or we just got a consumer spending readout just recently, right? And it showed that the consumers were somewhat resilient coming out of the fourth quarter. Well, we know why they are resilient, right? Because we studied this stuff, right? Why was the consumer very resilient coming out of Q4, right? Out of the holiday shopping season? Because they knew they was going into an inflationary environment where, guess what? It's better to buy now where everything is cheaper before it goes more expensive. So you buying in bulk now, right? To plan for the idea that inflation goes higher, there'll be some things you have to worry about wrestling to get out of a store at a point where the prices are much higher, right? So that was a one-off readout that we got in the retail consumer numbers, right? That PCE, right? Personal consumption, expenditure, whatever, and just retail sales numbers as a whole. We know that those are one-off data points. Now, literally, the next readout may come in a lot lower because people ran out and did all this kind of emergency shopping now to plan for higher inflation. That's typically how most people shop, right? They move ubiquitous to the average, herd mentality kind of reality, right? They're thinking the same way, right? The same way people ran out and bought toilet paper doing when COVID first hit, right? You couldn't make this stuff up. It's the same way how you would look at, a Costco, a Walmart, a Target, what just happened with TJ Maxx? They just had recent earnings. What happened to them? What happened to Home Depot? Home Depot, that commodity play. What happened to Home Depot? Right? They took Home Depot out back and put a bullet in his head. You couldn't make this stuff up. Right? Lowe's had earnings this morning. Did exceptionally pretty well, right? What happened to the stock? It initially popped, then it rolled over. Right?
Yes, sir.
Why? Because they're looking at this chart the same way we're looking at Costco here. It's at or close to this 52-week high or at a high peak point, and they know that the broader market headwinds are more relevant than that of its tailwinds at this point because of inflation, because of, again, high valuations, cheap money becoming a scarcity now. So they say, okay, maybe it's time to take profit in some of these high growth stocks and let them come down to valuable, valuation, so to speak, and then we'll kind of play into their strengths. Big money says, okay, we'll buy at 10% intervals though on the way down. If your money is not big as an institution, you have to, but you may have to make your number a little bigger. You may say, well, I'm working at 15% interval pullbacks, right? Or maybe 20% interval pullbacks, right? Because then it becomes more, relevant of a more of a discount to you than it's saying, okay, I'm just buying the pivots because I can. Right. I mean, we talked about the other day on one of our live streams, or during the middle of that, how do you assess value at a point where you sometimes may buy prematurely and don't give it time to kind of unfold, or you just say, you know what, I feel more comfortable playing these pivot points than just waiting to see what may happen. But you would have to negate all the different headwinds that are out there in the market to take that kind of approach. It still won't be nothing wrong, because over time, what happens? Things work themselves out, right? Eventually you have buyers that come back and they come back and pick you up on the way back to the upside, even though you probably could have still got it cheaper. Make sense? So our whole mentality is is to always take the very conservative approach. If you can play a 7-8 field, right, a 0.78 field, and you look at that, okay, that's a massive point of support on the way down after coming off its all-time highs. Well, the most notable Fibonacci level that most people watch is what? That's 618. That's the universal field that everybody watches. Now, it's no coincidence that 618 field sits at what? Right at that peak point of resistance on this chart, right at that at that cut pattern there. Or that, eccentric, U-shaped fry pan bottom, whatever you want to call it. Make sense? It's sitting right on it. And what is that price? I don't know, Sister Mo, can you put your crosshair on that? What is that price at that 618 field? The 618 field, the green one down there, right below it. The next one. The next one down, That's six. Oh, where you at? You was there. I'm sorry. Yep. What is that price of that stock? I know I got my little drawn up there. I'm sorry.
384.88.
So 384. So right now the stock is sitting at what? 494?
Oh, yeah.
So that's almost like another 90-point pullback potentially. Now, this is a question I will ask you guys from a very, again, from a valuation perspective. Do you guys think that Costco has propensity to potentially come down and test that area?
Yeah.
It's not a right or wrong answer, actually.
Yes. Yes. Well,
Chris says yes.
Yeah, whether we like it or not, what's the Fed raise the interest rate? Stock's coming down. That's just a fact. It don't matter about Costco can be 100 million times good. The owner can give us all free money. It's still gonna come down. That's just the reality. It's too high. Too high.
So we're dealing with the ideal of devaluation, right? Doesn't,
Right.
they get from its business model, the greatness of its business model, the greatness of it being a consumer staple, business model, and people are going to freak at that position regardless, right? But at the same time, you're saying it's closer to its 52-week high than it is from a mid-range or that of a 52-week low. Go ahead, Sister Monica.
Right.
Sorry.
I was, I remember, I don't know which day it was, and you were doing an analysis, and you were talking about how stocks would go at the 45-degree angle. And I was just kind of going back, kind of narrowing it out. And I was like, yeah, it can
pull
go.
up that ruler, right? I pull out rulers all the time. I do that when I draw them lines on my chart. And people like, what's this? This is what I'll do. I'll pull out a ruler and I'll plot a 45-degree angle literally on the stock, and just to see what it looks like in relation to, a pivot point or a certain, a genesis point, whatever. And I'm just like, okay. And that's why I use the linear regression band too, because, it's somewhat will help give you that kind of, real-time perspective and maybe, forward future outlook. But at the same time, if you compare that with a ruler at a 45-degree angle, what that would look like naturally, let's say, for instance, if I was just to draw that on this chart right now, what a 45-degree angle would be at that pivot of the Fibonacci band here y'all have here, right? It'll look somewhat kind of like this right here. Now this is, don't come from my drawing. I ain't the best now. Right? But it'll come somewhere, somewhat like that, give or take, right? And I might be off by some degrees, but it still puts it somewhere right around that 360, somewhere between 360 to a little bit around about 400, right? On the natural growth, and that's being that's being very loose, because in that perspective, because technically it's probably between, just if I had to really say it, between 320 to 400, right? That was seem more of a more eccentric in terms of what it would look like on the 45-degree or what they call organic growth. So that means everything above this top yellow line here, like this, and I'll just color code, I'm sorry. Everything up here will kind of be what? Over the, exceeding that of the what?
Right.
Exceeding that of fair value, right? And then you have literally a straight line when it went from basically here above, 400, 420 here, way up here like 560. That's just straight overkill, right? And again, an environment where markets are being what? Taken out back and put a book, getting shot, right? Because they're just, not that they're not a good business model, good use case, it's just they're just overvalued, they're extended. And more people, when they get, into crunching pennies, they're more reluctant again to take from their biggest winners and apply some of that fund value back into what? Their losers. Make sense? So there lies how you would want to rate any kind of investment in this environment, because you have to be patient enough to weigh all the pros and the cons. And there's typically not a whole lot of, it's no right or wrong within that perspective. It's just that you have to be comfortable knowing, how well suited your money is going to work for you, given these conditions. That's why I say it's not really right or wrong, because overall, you still look at, Costco business model and say, well, this stock still has propensity, even on a pullback to collect this stuff at some point. And then, buyers going to come in and buy it regardless, because they like its growth story, right? Until something changes, right? It's always, TBA, to be announced, or excuse me, to BD, right? To be determined, right? So unless something else changes in that whole business model. So that's how you want to assess value, and that's, even if you're not good at reading earnings and all that stuff, you're still learning that stuff. That's fine. A natural consumer understands, what's good value and what's not. It's just about your patience level, right? You have to say, well, yeah, I can add money here. Yeah, I can add here at, when it comes to that 7-8 field. And I think that's a good buy because I see some resistance there. I'll nibble in here because, if you nibble in there, you'll take the approach that, guess what? It's going to consolidate at around that area and then eventually traverse back up to the upside at around, 420, 525, 60. Then you ask yourself, what's the likelihood that if that happening, if there's more headwinds on a economic side of things in terms of the broader market, than it'd be for Costco to stand out above all things, right, on its own. So that becomes, again, a tailwind and a headwind, outlook, the way you want to break that down. So I would say I want it cheaper. First thing I'm gonna say, if I look at this rate, the Fibonacci band, I'm like, oh, I want this at the 618. That's the most algos, they want it at 618. Most big fund managers, they would love it at 618. They're trained to buy on what, 5 to 10% pullback because they got funds, right? Or clients. They got to keep their clients engaged. Or we bought today at this point, right? They have a mandate to do that. You, the individual investor, don't have to take that approach. You be like, look, okay, this is where the market's at. This is where the stock is at. This is what the sentiment is like surrounding the marketplace at this point. We do know there's more further risk, in this case, right? It's more risk to the upside than it is to the downside. The downside is obviously carrying more weight right now because a lot of things are overvalued for whatever reason, right? We know why, but that's how you play it in your head. So if you take the conservative approach, you first thing you'll say, I want this at what? At least, 400 or 380 at around that big support point there. And notwithstanding this guy up here, right? That one there looks like it's strong too, but it doesn't obviously have, I should say the gravity of what it would be like if you was to buy this at 380 or add to your position at 380, I should say, at around that price, right? Given the market's pulling it straight down. Of course, you see it now, it's kind of making that, oh, go ahead. I'm sorry. Go ahead. I'm sorry. You saying?
Oh, you good, Oba? Go ahead.
I was to make sure I can hear. I'm sorry. So that's the approach you would take in this perspective. Again, whatever works for you and your money, that's a personal thing. That's you always got to remember that. Your thesis has to make sense to you. As we say, find your niche and niche steal from everybody. But realize your goal is to get things as cheap as you possibly can on a realistic perspective. We're not saying this thing's going to go all the way down to the 0.23 field, right? It could if it got something really crazy happen, but that's not logical, right? The 0.38 field, you're gonna need a lot of things to go wrong for that to happen too. Realistically, 0.5 and 0.68, those are areas you would say, okay, man, if I can get Costco down at 380, 330, somewhere around there, give or take 330, 340 level, that would be great. Why? Because your margin of error at that point now puts you somewhat in the middle. You at, and I'll just draw a line, you can see what I'm talking about. That's your all-time high here. This is that midline pivot. if you take that same distance, which again, we talking about, logical or illogical, that same distance will put this thing at around about basically close to about $1.60 at around that same perspective. Make sense? So if you say, okay, well, I will put this thing in a box and make, the best, use case of my money within that, let me just place somewhat the midpoints of what that will look like at the top, right, or near the bottom of that, from the all-time highs, and then from the bottom up, that puts you around 280 to around about 400, give or take. That becomes your box of what? Let's say the box of interest, right? Whatever, call it what you want. The box of interest, right? Or fair value box. We just call it like a fair value box, like fair value box, FVB, fair value box. If you can get Costco at around that price, you'll be winning. Why? Because you kind of already got a mapped out worst case scenario, and you got best case scenario at all-time high. And what the worst case scenario would be if it fell back to what, the $1.60. That's where it was kind of somewhat, going back, dang near what? Dang the COVID close, not even COVID lows, even below the COVID lows at that point. So it makes sense around that 400 to 280 range. Now, even though it'd be more viable to say 360-ish, give or take, 380-ish, somewhere around there, that would make, a perfect investment for Costco, meaning starting out, because you could dollar cost averaging at better rates there if it pulled back any lower from 380, 360, 320 down in the 280 than it was if you started buying up here at 500, 560, 540, and you start dollar cost averaging on the way down, and you just putting what? Good money to a bad stock. Not the company bad, but the stock falling. You buying into what? It's like they call it what? Catching a falling knife. Like, you don't want to catch a falling knife in this marketplace right now. It could be brutal. Why? Because algos don't care about your feelings. They don't care about how much money you got, what you don't got. They have an agenda. They're taking out the bigger names that are close to 52 highs, and they're kind of hitting those guys first, and then they'll come back and see whether or not they want to add to them once they kind of hit a good value for them to start buying back in. So right now we're dealing with at least another month or two of getting through all the fireworks of the Feds. QE ends next month. Literally, that's going to be done. That 120 billion is going to be gone. That's for even adding the rate hikes bid, 25 basis point or 50, whatever. Let them fight over that foolishness. Okay, we still got, slow housing market that's starting to come into fruition now. You still got inflation. We still got to deal with that. That's a runaway dragon until they can put that, back in the bottle. And then you got a midterm election coming up here on the back end of the year. So they try to front run a lot of that stuff. It's going to be very, very, it's going to be very shaky. So I say, what I've been saying, of course, you don't have to follow this advice because it's just an opinion. I say be very patient right now, right? A lot of us took profit in Tesla over 1,100, 1,200, 1,000 plus. Guess what? We did good. We did good. We took profit in Moderna above 400 in the mid 350s. Look where Moderna's at now. It's sitting at $130.
Yep.
Think about that. You got to learn how to also pay yourself in this too. Yeah, we know these are still supposedly, in most cases, they're good growth stocks because they have a long-term thesis. In most cases, with some of these stocks, some of them are just more cyclical. They're growth for now, but they're cyclical in terms of long-term perspective because they have more variables to deal with, right? So yeah, we did really well to take profit in moments when it was the stock was up, 70, 80%, 100 plus percent, 150%. Look, people rarely get a chance to make 150% on an investment that been in the markets 10 years or better. We were able to do that in a matter of a year and a half, if that. A year in some cases for some people, 7 months for some people. That's abnormal. Markets have to revert back to the mean at some point, meaning they have to start acting on a more organic perspective after all this funny money kind of relieves itself from the marketplace. Then it goes back to a fundamental outlook in terms of what the market is really offering, for this company, this industry, this, that, and the third. You can have a very skewed personality right now because the get was so good. It's hard to say that, man, the market's gonna come down. Most people that's getting ran over right now, people that's can't take the fact that the market's coming down for organic reasons, and they just keep saying, I got to buy the dip. I got to buy the dip. I got to buy the dip. and they're getting ran over right now. Retail are the ones holding the bag. Big money already sold at or near the highs, and they're selling into any pops. Anytime the market gets a massive pop, dead cat bounce, they sell into that stream. Retail start buying, get excited, thinking the market's going to return. What happens? It rolls over and goes lower. This has been happening off and on for the past literally 2-3 weeks. Couldn't make this stuff up. And people are still sedentary and still trying to buy the dips at certain levels. Make sense? So you have to be patient with the money. If we convince ourselves to follow the money, well, guess what that means? You have to follow the money, not just, what your average peer might be doing, but what the big money is doing. Outflow and inflow is telling you a whole lot. It's telling you a whole lot. If the outflow is outpacing the inflow by 2 to 1 or 3 to 1, that means bigger money is selling into the pops than it is for retail to say they're going to buy the dip to save the market. They're trying to save it, meaning the retail, and the big money is like, oh, okay, they still stuck on just buy the dip, buy the dip. They don't understand how to read the macro picture of the marketplace right now. Okay, so we got us some willing participants that's going to hold the bag for us. Let's go. Make sense? So we want the market cheaper. We want our long-term stocks that we're putting forth for our future to even, prove themselves to us at this point, as opposed to saying, I'm just going to jump out there. And the best way to test drive a stock in a pullback is what? Through the options market. You lease, you rent, you don't own. You contract it out for a certain period of time, 3 months, 6 months, a year. You buy those leaps. The same way Monica was, successful in buying the leaps in Ford, right? When we was talking about Ford, like religiously, behind the scene, that's what took a position, right? And what happened? Well, that was in the moment when the market was just still feeding off all this good money, right? Sector, advancement in terms of EV stocks, energy plays that it bode well for Ford. At the same time, Tesla was ripping too, $900, $1,200, $1,100. Now those things are kind of coming to an end. What's happening? We're seeing the same thing happen across the board. Everything is taking a leap, a leap back to the downside to a degree, right? So just be patient. We can go through a myriad of stocks right now. I can assure you, if they're not 100% commodity-based asset that's really benefiting from inflation, if they're not a cyclical defensive play because they offer that level of continuity money of ubiquitous buying that people can't do without, like a utility, you got to pay your bills. You can't, get out paying that water bill or whatever, or utility-based stock. Some consumer staples, but they have to be more pure play. Even though a retail like Costco is still great because it carries a multiplicity of consumer discretionary and consumer staples. But it's not a pure play, 100% pure play on the consumer staples, right? That would be like a Procter & Gamble because they just making those items. That's all they do. They manufacture those items. Their headwind is just provide more contracts to put it in in the stores like a Walmart, this, that, the third. They have to deal with all the other stuff. Make sense? So you want to even parse straws or parse hairs, even when it comes to being able to delineate even the ideal of the strength of those art that are in the consumer staple space. So it's going to take some fine tuning. Now, we've been talking about this stuff. So I ain't like we ready. We've been talking about this stuff going on a whole year and a half, near 2 years. Like, get ready. This is what it's going to look like during this cycle. This is what it's going to look like during this cycle. This is the stocks that are going to get hurt during this cycle. These are the ones that are going to benefit, right? And it's like, okay, everything is starting to make sense. We talked about how Zoom at some point going to have its heyday, and then it's going to get murked, right? What's happening to it? It got murked. We talked about a lot of those stocks that were on that level. Look what happened to Teladoc. Look what happened to Roku. Roku was almost $500-$600 a share. Couldn't make this stuff up. Roku was up near the price of Amazon. Roku, a parasitic business model, right? All right, let me remove all my scrub off the screen here. All right. Look here. And it had the most clearest day double top at around $490, $500. Like, come on, guys. Like, seriously? Y'all know what it is when you see that right there. That's like, oh, it's time to get you start doing the Birdman hand rub. Look at this pullback, $490 all the way down to $118. Are y'all kidding me? Right? Are y'all kidding me? That's over 400 points. Because you say to yourself, how does a stock like this survive in a high inflationary environment in an environment where it had a specific purpose during the pandemic because it was a what? It was considered to be a what? A COVID stock. Why? Because it was stay at home, right? They call it the stay at home play. Stay at home play. It was a stay at home trade because everybody was what? Watching TV, Netflix and chilling, Roku and reeling. I don't know, whatever. It was a stay at home play. Now that people are getting back out and about, what's the value or the use case in Roku? A stock that was trading literally at $40, $50, $60, $70 a share in its consolidation mode before it began to break out, right? It hit a COVID low around about what, 60, 70, or somewhere about 70s here at the COVID low, 67, 70 bucks. And then after that, it went strictly all the way up to near $500 in a straight line. Now, is that organic or is that inorganic? I'm just asking for a friend. I'm asking for a friend. To take the approach that this is going to continue up at these valuations would be almost like what, ludicrous. Or your read on money will need to be reshaped a little bit because there's no way you can account for such a valuation on a company that has what? Low product value, maybe one or two SKUs of that. It's a remote control. You know, for what they call, for ancestors' sake, it's a remote control. Someone that can duplicate that same business model and take them out, meaning a bigger player, if they chose. So they have nothing unique to that regard, right? That's a way of just being, sane about how you look and value markets. Because things can get very out of hand when markets are irrational, right? So the same way you could have bought the leap into Roku knowing that this is a stay-at-home type of play because of what? Streaming, TV, people gonna be at home, and you benefited greatly. A lot of people did. You have to take that same inverse perspective when everybody's coming out of their cocoons of COVID, the pandemic, back into the real world. How many people gonna be home sitting there looking to buy a Roku? Like, I can't wait to buy a Roku. Like, seriously? Like, that stuff in the collect dust again for most people. And it's overvalued by a multiple of near 300 some odd basis point. That was his PE. He had a PE over 300 some odd value on his PE before it started coming down. Make that make sense? Of course, it does not make sense. Hence the whole shorten it. So you could have bought a leap, at around 480, 500 on Roku, actually, because that was the double top that told you exactly where the resistance was. And I mean, you could have bought it 6 months out, 7 months out, a year out. And it would have been just like, man, just taking candy from a baby, for lack of better terminology, right? But that's what it would have been. It would have been easy money. Right? Because, we hit Roku. Some of y'all, we shorted it in the earnings, before earnings. I shorted it several times into earnings. And then I shorted it, during its earnings, right? And just made a killing. Just, stop and go trading, of course, that's, what I do myself personally, but that's how you want to value stuff, guys. Now you say to yourself, okay, now Roku is back down to $100 a share. Is it attractive here at $100 a share as opposed to 300, the 200, right? Some of the thought Roku was attractive at 300 after it started pulling back. Clear as day. Why? Because look right here. See right there? That pivot right there at around that 300 level, what was happening there? The brakes got slammed on it. People started buying. See how the consolidation there? Y'all see it?
Mm-hmm.
Well, guess what? I'm gonna show you how this stuff is not even rocket science. Somebody thought it was attractive at 200. I ain't making this up. Y'all seen it firsthand. Well, how do we know that? Look what happened there. It pivoted right around 200. See the green bars coming in, fleeting in? Somebody thought it was attractive at 200. Oh, this is just over. So this is just too much. It's Roku, bro. We got to go back 300-400 from here. Oh, this is the bottom, bro. And what happened? It went down another 100 points. Couldn't make this stuff up. And then it's right now, it's at that $100 point. Everybody that bought it 300, 200, they kept averaging down. They just put a lot of good money on a what? On a bad downtrend. Does it make sense?
Mm-hmm.
How the saying go? Too soon? Too soon, bro. Too soon. Right? Too soon. So it's about, again, understanding how to read value. And y'all know we conservative by nature, especially Black folks. Stop playing. This Urban Economic Empowerment Show. Urban Economic Empowerment Show. We are the Mike Epps of the world. We work a little so strange for a little piece of change. Look, that's our thesis if we can, right? That conservative nature is a, man, it's a diamond in the rough for Black people. That's why I know we do very well in investment spaces, given the proper knowledge and understanding, because we already come from a consumer background and a very conservative, skeptical background. Those are good things that serve you well in the marketplace. You have a natural skittish nature about you, a natural discipline, given that you own your A game, of course. I'm not just saying just out there, just throwing everything to the wind and see what sticks. That's a net positive for your skill. So you say this up, man, I don't want to buy this thing at no 400, man. I don't definitely want to buy the 300. Look, if I get around about 100, bro, I'm in there. See how that work? Now your margin of error becomes more what? It becomes more lucid. What I mean? Because you look where it's at now, right? You look where it came from during the COVID lows. Let's put this in the kill box. The COVID lows has its stock again around about $67, $70 a share. It's about $30 off that right now. Oh, about what, 40? About $40 to $50 off that point right now, right? So you say you got about a 50 point window, right? We'll just put 50-point window, right? If you take that same approach like I always do, I say what? Split that thing down the middle, right? Split that thing down the middle. Now you working with what? A 25%, 25-point what? Margin of what? Of opportunity. Now, it ain't by mistake that this thing has pivot points at around what? That same 25, what? That midpoint. See right there? See right here? That's consolidation. Right? Matter of fact, Sister Money, could you put your crosshair at that point if you don't mind, sis?
Well,
Yeah, right when those white arrows at. The bottom of those candles at where the white arrows at.
okay.
Yeah, so what is that? It's like $100, right? So around about $100. It's no secret that Roku bounced at what? At around $100, $102 to $100 a share. Why? Because markets love what? Whole dollar, half dollar marks naturally. And number two, it had what? Massive what? Support there from previous what? Trading history when you look to the left. Does it make sense? To a lot of people, that's fair value because they say, well, if it goes lower from here, well, worst case or base case is that it returns to the COVID low. That puts around $67, $70. You can average in a lot better from $100 to 70 than you can from 300, well, 400, 300, 200, down into 100. But unless you got endless money, then I'm gonna say, you know what, man, look, all right, you big meat, John. You got endless money, huh? It makes sense, right? Because you want things at a fair value based upon, investment history where a lot of other people took that same approach, right? This stock's business model, its thesis does not check out at nowhere near any of these levels right here. Nowhere near any of these levels here. Because we can easily go look at their PE. We look at their PE at those points. It's price to equity, price to earnings ratio, right? And it's forward PE. There's no way anybody would have made the same argument that this thing is what? Worthy of an investment at $400 a share. And we already had the telltale signals that this party was going to come to an end. Why? Because we religiously went over a lot of videos, or we went through a lot of video breakdown of what? Understanding the nature of when the market swings from cheap money back into what? More secure money. What are some of the stocks that are going to get hit first? And we already knew that the COVID plays or the stay-at-home plays were going to be the first ones to get hit too. Why? Because everybody began to go back out, right? From the pandemic. Your Zooms, right? Your Teledocs, right? Your Rokus, right? Your DocuSigns, right? Everybody signed legal papers online because they had to, right? And we can go down the list. Many of them, all of them got what? Taken out, in the back and got what? A bullet put in the back. All these stocks right here are down substantially. Go to Zoom stock if you don't mind, Sister Monica, if you don't mind, sis. Let me clear my drawing there. Sister Monica, you there? She might be busy. Yeah, she be handling business. But all those stocks I talked about, I can assure you all those stocks going to look essentially about the same what Roku stock looks like. Again, the Teledocs, the whole nine, the DocuSigns, and we saw basically all of them fall, right? On the latest earnings report for the most part, most of them Spotify's another. The Spotify effect even really had nothing to do with Joe Rogan. It was just the stock was overvalued too. The Joe Rogan effect just made it, added more fuel to the fire, but it was already coming down. Right? Shopify, right? Forget about it. So you're starting to see something here that's a pattern with these stocks that are, seeming a little overvalued, not by our standard, but just by overall market sentiment, right? Because you still got to trade within the sentiment of how everybody else feels about a certain stock too, right? That's a part of our thesis.
Hey, Oba.
Yeah, go ahead. I'm sorry.
No, I'm glad you said that about the Spotify and the Joe Rogan scenario. So there's a documentary on Netflix in regards to Boeing and what happened to those planes that came down last year. Now, couldn't that document affect the actual company itself, bring it up past events?
Well, yeah, that could be a definite a sentiment indicator of what the negligence of what a company like Boeing. Right now, even though they had to go through the hurdles to get the FAA approval, they still got to get Chinese approval, right? Within their the airspace. They were fortunate to get it in Europe, right? But I think they were still waiting on to get it from China. They might already got it. Y'all was following that story real close. Y'all know I was all over Boeing, right? All right. Just really kicking them in the teeth. And notably so, they deserved it. But nonetheless, that was the whole, the provocation behind that was that they were making a compelling story that they had fixed the issues, this, that, and the third, but it turned out they still had very bad practice. And so anytime that reminder comes into fruition, at some point, of course, it's going to wane and it's going to abate. Then people are going to say, okay, we back to, thing. We hadn't had any issues lately. Everything seemed to be checking out, but they are under that telescope. See what I'm saying? Any bad thing at this point will make that a problem again for Boeing to a degree. So that's why it's been still hovering at around that same, $200 level. It have yet to really break away from that $200 level. Right. So of course, if you, let me see, see if I can, I'm about to share my screen real quick. Let me go over here real quick. Yep. Can y'all see my screen, guys? Sister Marla, she said, I think she had dropped, a call got dropped, so she'll be back in shortly.
Yeah, you see.
Yeah, see. So just really quick here, just on GP, since we're speaking about Boeing here. See right here? Look at this chart. This is the most ugliest chart ever. And it's near-term perspective. Now, on a bigger picture, it looks like it's what? Starting the bull flag, right? But let's do this here. Now we're gonna put some perspective on it, right? Put some respect on Boeing. Look here. This is Grace up here. This one, it was at its heyday, Grace. Above $400, whatever. This is when it fell from Grace because of the crash. This has been slowly trying to climb its way back, right? As of today, it's below its 200-day moving average on the daily, but it's been trading at or around it, that 200 moving average, going back as far as what? At least July of 2021. So it has found home being at, above or slightly below the 200 moving average on Boeing. So again, at around that $200 $200 price point, right? So this is just a whole lot of consolidation, just building up for, potential value of the stock, realizing or working out its differences in terms of it has on the engineering side, on the PR side, on a competitive side with Airbus, this, that, and third, all the different layers to that, and trying to figure out if it can ever return to a point of prominence, right? And those levels to try to figure out when that can potentially happen ain't hard to figure out. Now at this point, because the stock been in a long consolidation channel like this here, you already know it has to clear some major levels to even start being looked at on the tractor side. Number 1, 220, 230, clear as day there. After that, you got around 240. After that, you got around about 250. What are you seeing in that moment when I'm sitting there? What stands out in your mind when I start calling out those numbers? You're hearing that this stock is only trading at around $10 intervals of make it or break it moments. $10 intervals, clear as day. Because those are areas that we can plot on the chart and see clear as day. That's where those points of resistance at around 230, clear as day there. Next one up at around 240, clear as day. Could make this stuff up. At around 250, you see it right there, clear as day. Could make this stuff up. After that, again, same thing, around 260, give or take around there. Up here around about 270, 276, that's at the heyday. If you clear 267 or 276, 270, 7 area, then you can really get excited about Boeing. But until then, it's trading inside of a $10 what interval kill boxes, I like to call it. And now and below is 200 moving average and the 20-day moving average. Why? Because what's bringing it down? The broader market.
Overall, yeah, the overall market. Yeah.
Overall broader market is kicking them in the teeth. So no matter whatever good news they got coming out in between time, it may help for a small spurt, pop, but eventually the broader market saying, okay, yeah, but yeah. So they like to call it collateral damage, right? Call it, however a person want to call it, but that's the sentiment of the market until things change. Because guess what? Oh, so yeah, Boeing also benefited from cheap money, 0 interest rates, borrowing against it. They had to tap a lot of revolving debt to even get out of the hole of being close to bankruptcy because of those plane crashes. So they really, strapped for cash. Boeing used to be, again, America's darling stock. Everybody used to look to Boeing more than they even looked to Apple. Believe it or not. Now Apple then took the reins because Boeing lost its prominence because of those crashes. So it's been hemorrhaging cash. It had to pay out, it had to pay liability bills through its other its vendors like Southwest. It had to pay those people bills literally on its own because their planes were shut down. Boeing lost a lot of money is my point. But nonetheless, just use it as a case study. You say to yourself, okay, well, from an investment thesis, what's the overall value of Boeing at a point where I feel like it's attracted by when it can really begin to get its feet underneath itself? Well, if you use a $10 interval window, here it is at now under 200. Now it's at 196. The next level definitely is going to test 190 at some point potentially, right? As you see right there, clear as day with the support points on the chart here, right? 188, 190, give or take. After that, you look over here to the far to the left, and you see the next areas are those places way over here, right? Way over here, these little gaps down here, 170, 175, 170, 170, obviously a whole number of points right there. You see it clear as day. It has a potentially definitely to go down there because we really yet to see the significance of what March rate hikes will look like in terms of the market. The market said that it's trying to price it in, but it cannot because we do not know the extent of what everything else may look like. The dollar, the 10-year yield, there's a lot of deciding factors, right? If anybody tell you that it's all priced in at this point, they just straight talking from a place of ignorance because you
definitely trolls.
Essentially, right? Because you can't price in human emotion. You can't price in stop loss that are already set that you don't get a chance to see unless you're a market maker, right? Like, unless they got to out to find out what stop loss is at, then look, you playing the same energy as everybody else, meaning trying to figure out when everybody else is going to have their breaking point or their capitulation moment. Make sense?
Mm-hmm.
The best thing you could do is follow it from the chart, because the chart is another layer of showing where their money's at, right? That's one thing that's sedentary. I see their money sitting here at 186, 188, right? 180. I can see it clear as day because I see the pivot points. I see where people came in and tried to buy that pivot right there. See? Pivot, right? Always falls at what I can see, as they say, right? 190 up here, right? Clear as day right there, a little shadow area right there. 195, 190, I can see it clear as day. It seems that's the same thing to it. And when markets are coming down, the first thing people do when they feel like they've lost over 10 to 15% of their worth in a stock at a certain point, they start thinking just like everybody else. Man, what the next 5% may look like, the next 10% may look like. Let me start setting me some stop losses at just in case. So yeah, you can read a lot about the market just by looking at its technicals before you even dig deep into the fundamentals. That's why I like to be balanced in my approach to both, or I like to kind of at least share that with you all, that we're not going to be one-sided in this. We're not going to take the, look, I only know the technicals and that's it. Forget all that fundamental stuff. No, that makes no sense. I'd rather be well-equipped than to be, halfway equipped. And also being able to read the psychology of markets. That's what's really going to help you too. When people get to that point where they can't take it, they're going to sell, right? Right. So, all this stuff makes sense in that perspective. So no matter what stock you think about, that's how you want to go about looking at it. You want to weigh the pros and the cons. You want to be honest with that approach to looking at it from an executive perspective, not our own personal consumption value of a stock that we may or may not like. You say to yourself, what does the overall market say about the stock? From a chart perspective, fundamental perspective, investor sentiment perspective, What's the broader market sentiment like overall affecting the stock, the sector itself, the competition within its, industry? Put all that stuff on the table. Really rationalize a good idea of what's going on at that moment. And in doing so, you'll figure out, exactly how a depth of understanding you may have about looking at, fair value or at least assessing fair value. Y'all with me there? Is it making sense a little bit?
Yeah, it makes sense.
Because that's the only way you're going to be able to survive the market. Why? Because again, 10% for us is a totally different for a JP Morgan. 10% for JP Morgan is crazy. Right? If they got if they working with a book value of well over, let's say, $1 trillion plus, 2 trillion through 2 or 3 trillion. Well, what's 10% loss on $1 trillion? That's 100 billion. Imagine you take $100 billion L and it happened, what they call it, rapid fashion, meaning because the market pulled back for whatever reason, right? And you just take a 10% drawdown on that $1 trillion book value, you just lose 100 billion like overnight. Now you lose 10%, and let's say you may be working with, 10,000, 100,000, 5,000, whatever, right? You know what that 10% gonna look like, right? It still hurt equally the same for people that got $1 trillion and then your 5,000, right? And you lose 10% of that, right? You just lost what? 500, right? You with me there? Or in this case, 1,000, excuse me, right? No, did I say it right? Oh, I got my math wrong. 500, right? Yeah, 500.
Yeah, 500.
500. It equally hurts and you feel that pain the same. You make sense? But their value in terms of JP Morgan is that, of course, the fact that they're dealing more, they can move money around, more strategically to pad that. Then particularly you can if you lose 500 off that 5,000, because you only got so much you can work with in a marketplace that's already thinned out. What I mean by thinned out, I mean if it's coming down, you can only put money to work in places where it can only be beneficial to the strength of that value that you have to work with. Now, it doesn't make that you have to chase the market. You don't have to try to prove that you Hollywood Co, that you can just go out and find the best. You have to be more patient, is my point, with your money than that of a JP Morgan if they lose 10% off $1 trillion. You with me there? So by nature of that, you have to take the very conservative approach. Now, you can still be aggressive, but you still have to be very comfortable in your and your intellect to be that, look, I can't just be jumping out the window just because, it look good here. If I can get it cheaper, then I want it cheaper. That's how your approach should be to this anyway. If I can get it cheaper, I want it cheaper. Even if it can't start to pull back 10%, 15%. Again, natural corrections on the stock is at 20 to 30%. On the index is It's 10%.
You do that anyway in real life. You want the best discount you can get.
Shoes, house, car, cell phone, earbud, whatever, right? Your woman, right? I need you to discount. I can't hold up, shout it. I'm gonna need to get you a discount right now. I can't. You're too expensive for me right now, right? Let's say we do away with this, but y'all get my point. But that's natural nature of people who realize that if you are a good discount shopper, you should be able to take that same thesis and apply it to the stock market and make a killing. Why? Because you already come with natural attributes that are net positives. Don't fight the market. Don't try to prove that you Hollywood Co, because the market don't care about you proving a point to nobody. It is an individual sport, is it not? It's an individual sport. 100% individual sport. That's what I love about this. Like, no one can mess up your opportunity in this but you. Think about that. That's leverage. And then there's no competition. It's you literally against the marketplace. That's it, period. End of discussion, roll credits, period. You against market makers, hedge funds, banks, other retail traders that, inevitably going to make bad decisions because they're using emotion as their logic and not intellect as their logic. That's a big difference from emotion to intellect. It's a big difference. So that's why I say things like that. Of course, if a person follows it or not, that's up to the person. But that's why I say we rent, we lease, we don't own. If you take that approach to life in case of investment thesis or executive entrepreneurship, that means you will never get emotionally attached to any one thing unless you really have a passion for it or your heart is really in it. That's the only way it matters. But in this case here, when it comes to money like this on the market don't care about your feelings. So you don't have the luxury to have emotional connection to a stock in a way where if it's underperforming and it's continuously, going lower, and you just keep adding good money to a bad stock, again, make that make sense. How's that logical? When that money could have been suited better in something else. Or you could have said, let me just let me stop playing. Y'all probably remember this game. Y'all old school, right? Y'all remember that old school game back in the day called red light, green light? Red light, green light. Old school, right? But guess what? Stop trying to play red light, green light with the market and say, you know what? If I think the market's coming down and my stock is going to, obviously be in the crosshairs of this or be, collateral damage in this, if I'm a hedge against this position, if I really think, it has a place to kind of return back to promise at some point, let me be strategic instead of just wasting good money on a drip fashion, on a drip theory, on the way down, red light, green light. I'll just go on and buy me a what? Let me buy me some put leaps, right? To hedge against what? The potential downside. Best case scenario, the stock don't come down as far as it need to, and whatever money you make in them put leaps on giving it a 6 months time frame, a year time frame, that little bit of profit that you made or a good amount of profit that you might have made it, you turn around and buy the underlying, dip on that stock when it start to consolidate and show good support, and the stock starts reversing back to the upside. That way you didn't waste a whole lot of money trying to play red light, green light, red light, green light, red light, green light.
Trying to catch the bottom.
Exactly, trying to time the bottom.
Yeah.
Hence the saying goes, time in the market beats trying to time the market.
On the market, yeah.
Hey, over right quick. I'm sorry.
But, no, you got.
So when you go ahead and implement that plan or that strategy to hedge, the amount of options that you're using or the lot size of the options that you're going to use to potentially use to that hedge, does that have to balance the same amount that you have in your actual portfolio? Like let's say if you had 10 grand in your portfolio, how much in option wise are you trying to leverage? You get what I'm saying? Like trying to outweigh or leverage.
Like Band-Aid money, right? Say you got 10 grand and you already got positions on, right? And you got 10 in cash.
Right.
So let's say on a leaps on the hedge, right? Because that's what a derivative is. Derivatives were born out of necessity, right? To hedge against downside risk in market, right? Because we know this when we watch the videos about high frequency algorithm and bots and learning about money, the whole value behind money, how that stuff works, and derivative assets being born. It's the natural hedge to help people to play against the downside. If you work with a 10,000 cash lot, dry powder, and you got positions on, and the market's coming down, and you say to yourself, out of that 10,000, I have allocation to the buy stocks, underlying values when they start to hit certain pivot points on the way down, right? And I could also do what they call the universal hedge and buy leaps, right? Out of that 10 grand, you know what I have allocated for that? I would have the third breakdown mentality of the ship. Why? Because everything works in halves, thirds, and wholes.
Right.
In a business perspective, think about it. Natural business partners, it's either going to be half or a third. If it's third, that means it's just three underlying factors in it. Is you, the next guy, or the distributor, the seller, and then or the wholesaler, or the other business partner, or the end consumer, whatever, right? That's thirds, right? That's that third mentality, right? If it's just again you, the sole proprietor, of course, what you're dealing with then, right? Then it's you again trying to wave out all the different factors of what's happening in and around the business model, right? And saying from the half theory, if I got 10 grand, I'm breaking that thing down in three pieces, right? 3,333. That's for my leaps.
Okay, I got you. Okay.
3,333. That's for my I call it a dry powder add. We'll just put dry powder add. I mean, you just add dollar cost averaging, with actual money to a position where you feel like it just, if you can add a little bit within cost basis. I mean, if you can add, throw 100 on it, a couple hundred, what I'm saying? You can play into it as it's pulling back. But you got that to allocate towards that, right? And then the other 3,333, that becomes the leap, dry powder, and you got this is your safety net. The safety net fund value, right? So to put safety net, right? Meaning that money is ambiguous, but it's more so that you don't want to spend this if you don't have to, right? You want to go out your way to not ever have to go that far, right? to that level of that last tranche third or that last tranche third 1/3% value. Does it make sense?
Yeah, gotcha.
But you always try to the goal is not just to go broke because you got money sitting in the account to buy stocks. That's not what it's about. Right? The goal is to be able to make money in a way methodically where you don't have to spend a whole lot, eventually add to that safety net money and build that up. You make some profit on a stock, on an option play because of this, that, and third, you take that and you add it to that 3,333, right? And you just keep Go ahead, I'm sorry.
No, yeah, you good. Yeah, you right.
Right. That becomes because the money is already actionable. Why? Because it's still better. It's in a better position being in your brokerage account than it is in a bank account. Makes sense? Especially with money market ain't paying that. You're just building up your money to what? To make a bigger play at some point, or better plays at some point when the markets show you a good buying opportunity. Okay. You got bigger cash to work with as opposed to liquidate, and then because you ever get to the point where you get desperate and you want to take a play and all your money out there working. First thing you start saying, man, let me take one of these, underperformers off the table. You be searching, boy. You like, okay, like, boy, something got to go today, boy. I'm sorry, boy. Somebody on the shop.
You over there looking, who ain't producing?
I'm talking about you straight baby powder, been pimping since been pimping. What about employee? What about your employees? Man, we don't do no employees over here, baby powder.
you gonna smack Peloton with the baby powder?
I'm saying, let it fly. Look at him. Something got to go. So we don't want to be in that position. We don't have to. Make sense, guys? Because we want to say our money has to have purpose and procedure, right? If not, then yeah, we just doing it because we can and we got it.
And
that's fine.
Yeah.
You see what I'm saying? So it's about learning how to be a better fund manager and managing your own book, right? As we listen to people like Anton Creel and a lot of these people who've been in the game and they trying to really get people to realize, like, look, it's fun when you're making money, but it ain't fun and games in terms of the approach you need to take to being able to get to the bag, right? You got to be very calculative and strategic. You're running an online business. You have to think like an executive, like a business owner, all day, every day. Cost analysis of material, cost analysis of competitive value, marketing and advertisement. I mean, the whole nine. You run a business from your the armchair of your favorite little couch at your house. That's power, guys. And can't no one stop you. So you gotta see the gravity in that, and then, but also be very, very disciplined and patient to make the proper moves and not try to get ahead of yourself. And you're gonna have a human emotions moments in this market. People that's been in the game 30, 40, 50 years still have them too. Because money is, look, it's hard trying to, not, allow that stuff to show. Or sometimes when you chase the market, when you feel like the market done you wrong, hence that's why, that Mark Douglas trade in the zone, boy, right? Sometimes you got to go get your head checked, right? Go get, get them 6-7 hours in, get your mind right, or do certain chapters of it to kind of get your mind right where you may be kind of overstepping yourself. Basically, checks and balances. In anything, you got to have checks and balances. In anything in life, where there's a module or methodology or whatever, you have to have checks and balances because nothing is just a free fall, right? So yeah, take the more conservative, aggressive approach, right? Hence, we have sayings like what? Humbled and hungry. Like, think about that. You be humble, but you still hungry at the same time. That means you just cautious in your aggressive approach to what? For growth.
Right.
Patience and persistence. We say things like that all the time, don't we? You got to be patient but persistent. What does that really mean? That basically means that what? You have
be strategic. Very
strategic. Boom. You have to be strategic because everything is just not what? Instant what? Green light. Some things are going to be, yield light. Some things are going to be red lights, and you have to know how to play the middle in all of those. That's what makes a great investor or a great trader. Make sense? So we're not going to put the cart before the horse, right? You can if you want. Each individual has to be accountable for him or herself. That's one thing also about this market that makes it unique because number one, either you're going to make money or you're going to what? Lose money. It's that simple. There's no in between. Now you could be neutral and just sit on the sideline with your money in brokerage account. You win neither, no lose, right? Yeah. But if it's sitting in the broker account, then you have it in there for a reason to potentially put it to work, right? So at some point, you got to be willing to take a chance. You have to put together a thesis and then go what? Have proper application, right? So at some point, you're gonna get out that neutrality zone and get into the game. When you do, make sure it's strategic. That's the whole point of this. Make sure you have purpose. Make sure you ain't going at it from a very implicit bias, right? The worst thing you can have as an investor or a trader is what? Implicit biases. Oh, that's my team, bro. Y'all know that sport people. That's my team, bro. Joker be going tears in the eye when you talk about your little team. Boy, them Dallas Cowboys so suck. Boy, Joker tears get the welling up in his eye. Boy, his feet get the clenching. Boy, Joker, like, what? You talk about the Cowboys, bro? No, you ain't. Like, bro, chill out, bro. They pay you get a dividend? Oh, they send you. Oh, they send you a royalty check every month. Oh, my bad, bro. I'm sorry. Oh, okay.
Gotta give me the royalties.
Right? Them jokers ain't getting nothing but emotional high. Again, this is not going in on people that like sport. Y'all know what I'm saying when I say this here. I'm speaking to serious people who are understanding the value of nature of things. When you put valuations on certain things, if your goal is to receive, as they say, good return on investment, return on equity, right? That comes in the form of what? Tangibles, not emotional cue. Now, you get the emotional cue, you should get that from your loved one. You shouldn't be out there searching the world, just random stranger for emotional highs anyway, right? You're doing it all wrong if that's the case. Your goal as an investor, as a business person on an online business, you run an online business as an investor, trader, whatever, just business entrepreneurship in general, your goal is to acquire what? Tangibles, right? Net profits, net positive profits, net positive profits, tangibles. I can't eat emotional highs. I cannot eat emotional, cues and whatever. Y'all get it. Look, you're thinking and moving on a whole different level once you realize how to make money on your own, legally. Make sense? You can teach a 6-year-old this, 7-year-old this, a teenager this, and they'll run circles around the average person around that's 20, 30, that's emotional, that, can't seem to put two thoughts together collectively because they all over the place, erratic. And that teenager will run circles around them. Right? So it has no respect to person in terms of age. It don't care about your educational background, magna cum laude. Look, emeritus status, none of that stuff matters over here. I say this a lot. People like Neil Tyson deGrasse, right? He'll probably suck at this. He'll straight suck. Why? Because he'll what? He's a mathematical guy, meaning exact science value in terms of his outlook about how you go about, rendering his craft. When it comes to the market, it comes with a whole lot of nuances, right? Look, you playing the role of a psychologist, a mathematician, a statistician, right? You playing the role of all those people, all in one. A marketing professional, you play a CEO. You take the attributes of all these different people. How wonderful is that when you start thinking about that? Seriously. You see what I'm saying?
Mm-hmm.
And you get to dictate the value of what you can pull out of the markets at any given time. Not that you have to be in it at any given time, but you have the ability to. That's the part I like about it. It's called what? Right? Y'all know it. Look, it's called, as they say it with the chest. It's called access. A lot of people don't have access to opportunity. Not the way that they know they really truly deserve it for whatever odd reason. But here you have undeniable access. Am I lying? Or am I telling the truth? 100%. So again, that eliminates a lot of pressure off most people. If you are committed to the ideal of the interest in this, to figure out ways to grow supplement income in and around your existence, your world, then guess what? If nothing else, this right here definitely provides you that way to get to do that. Of course, there's other stuff too. There's drop shipping, there's business ownership. There's just so many ways you can make money. Of course, that's what the whole point of the Urban Economic Empowerment Show is about, right? It's about providing people a pathway to what? Financial sovereignty. In a lot of ways, that's basically what it is. Financial sovereignty is what? You've been in a position where you can make and control your own financial destiny. It's that simple. It ain't hard. It ain't rocket science. And the greatest mathematical equation is what? We talk about it a lot, right? What is the greatest mathematical equation ever?
Time over money.
Say it with your chest. Over.
Time over money.
Time over money. People don't have time to waste, and they definitely ain't got what? Money to waste. Am I lying or am I telling the truth? But how many people waste their time and they're trying to figure out, how they can make money? A lot of people waste their time trying to figure out how to make money because they haven't figured out how to compartmentalize their time. A very good use case of their time. They'll give 3 hours to the NBA. Don't come for me, guys. I know y'all finna come for me now. They'll give 2 hours for what? For reality TV shows. They'll give Facebook about 6 hours. Facebook gets 6 hours. That's scrolling, thumbprints all up and down your little cell phone, tablet, whatever. 6 hours of Facebook. Another, maybe in tandem to Facebook, maybe what? 3 to 4 hours goes to what? To the Instagram. Right? Another 2 hour plus to go to what? Twitter or Snapchat. Y'all see what I'm doing here? What's happening here? You only got so much time in the day. Is the majority that is given to what? All these ancillary extremity things that ain't necessarily giving you a what? A return on your time, meaning a tangible return on your time. Then that means you ain't serious about what? Your time. You can't claim you about time, time management or time over money if you're giving all these people here the majority of your time and they ain't give you nothing in return on the beneficial side. Yeah, you may get a little knowledge here and there, but you still got to put that knowledge to work. Make sense? As we say, what? Knowledge equals power, power equals profit. If you get the knowledge, you should have a statutory value of what? Of power already what? Within you now that you know how to make moves. Then you have to take those that information and what? Apply it. Which will benefit you by what? Relinquishing you a tangible or a profit, right? Most people get the knowledge and they stop right at the knowledge part and they just sit there. And they just sit there. And they just sit there. They just want to debate, argue, talk, but they don't want to put the money, the information work. I'm like, monetize it, family. Monetize that information. Everybody else is doing it. Everybody else is doing it. Make sense? So again, for us, it's a no-brainer. We're not sitting there, we're not capitulating against the opportunity. I just say that. I'm speaking for my peers. I know that's listening here. All you guys, we here for a reason. We're not capitulating against the idea. We know what's out there. We know the potential that's out there. We've seen it. A lot of us have touched it. A lot of us are touching it. It's they say, look, look, jokers don't look. It's hard to just throw this away once you figure out, just the value of it that it could do for you in your life. It's hard to throw this away and go back to saying, I'm just gonna punch like 3 or 4 clocks. Like you drop this to go get 3 or 4 jobs. That make sense. For every job that you get, that means you losing what? More time. You ain't really making that much extra money because the time that you relinquish to work all the 3 jobs, the money ain't sufficient enough to kind of equip to that of what you're getting paid out for. We had to say that. We just say in when I was doing marketing, international marketing. You say, why work twice as smart? Why work twice as hard to receive twice as less when you can work twice as smart and receive twice as much? Most people that got 3 or 4 jobs, if they really ain't leverage them in a way to really build out a framework to build another bigger business model in the back, they working what? Twice as hard to receive twice as less. Because you can't get that time back. Look, time is valuable once you realize it's a commodity. For us, it's like, no, I'm not finna waste my time. For the most part, I know I'm speaking for most of my peers that's on here. We know the importance of this time, and we're learning more and more every day, the importance of that. Because at some point, we realized when we was giving away a lot of our time just to in and everything, and we really weren't getting the benefit from it that way that we know we deserve it though, it just makes sense. Like, why? No, look, I can cut this out. I'm gonna cut that out. I'm done with that. This ain't really paid me, give me no good return on my investment or return on my, look, it just doesn't make sense. Now you're starting to think and move like a business person. That's just the fact. And numbers don't lie. In that perspective, numbers don't lie because your end result will be you're utilizing that time properly, guess what's gonna come? The money. The money. It could be today, tomorrow, a year from now, 3 years, 5 years. Stick with, look, all I'm gonna say is stick with it. Why? Because like anything, Rome wasn't built in a day, Africa kingdoms wasn't built in a day. Look, you gotta be patient with the scenario, but be persistent in your pursuit of it. For us, again, it's just simple because there's no time constraint. There's no time value in learning this. That's why they say what? It's a marathon, not a what? It's not a sprint. Right? You don't need Usain Bolt to show up every day at the stock market. Right? Look at him. You get you out there on that track, boy. But it comes to the stock market, boy, look, all that speed in the world ain't gonna do him what? No bit of good. It's a marathon, not a sprint. Right? That's the difference here. Right? So realize that you got time to learn it, but just make sure you're using it to your advantage or to your benefit. Make sense? Right. So yeah, I know I kind of went on a little spree there for a second there. Because I want to get back in the build. But I hope that helps a little bit because this is a very vital moment for markets. And I think it's great for us to realize that now because as much as we've been prepping for this moment, we've been prepping for this. Now, y'all know as well as I know what I'm saying this here. We've been prepping for this moment. Have we not? Be honest. Have we not been prepping for this moment in the market?
All day, every day.
And I want y'all to be honest with me. If we ain't been prepping for this moment right now, please tell me because I'm gonna work twice as hard to make sure we get what? We tighten that belt down even more. I do feel like we've been prepping. I mean, not just yesterday. We talking about months and years. We've been prepping for this day. We've been forward thinking like we're supposed to. We knew this day was going to come to fruition.
And what's crazy open? It's just getting started.
Right. So that's why I know if we've been prepping, like the same way a person practice every day for a reason, right? Practice. I'll have to stop. Practice, yeah, practice at AI. Go to practice, bro. Right? Even though you just start, go to practice. It matters, but because we've been practicing for this moment. So now that it's happening, the first thing about it, understanding the value of practice is that what? Practice brings what? Continuity, right? It brings consistency, right? Because again, within that, you're also willing what? Patience to learn in that value of practice, going over stuff over and over. You have to have the patience to learn. The patience is the key. That's the key. Allow things to unfold. You don't have to rush it. You don't have to try to prove that again, that you can just, jump out the window. Be patient. Work with what you got till you get where you need to go. Stay, as they say, people say, stay in your lane, all that. Just work with what you got. Be patient and let things happen, right? Because again, at the end of the day, it's not a congeniality contest. No one is grading your performance. It's a you against the market. That's what I love about this stuff. It's very personal. It's a very personal perspective. So yeah, let the market come to you. Don't run to it. That's just my opinion. Of course, you don't have to follow it, guys. Trust me when I say that. I'm just speaking about it from a place of, when I see things happening in and around the markets, first thing I'm telling myself, especially when the market's in a downtrend, the first thing I'm gonna tell myself when I see markets pulling back, who am I to convince the market that, a pullback of 5 or 10% is enough? Like seriously, how can you turn a market this big of this magnitude on your own with your dollars? Anybody go? Good luck. That's all I'm gonna say. Good luck. If this thing pulling back, it's pulling back for a meter reason. Again, going back to the SP right here. This ain't by accident. It topped out here. We were ready for it up there. We already had been planning for it up here. No, look. All right. And ever since then, it's just been what? feeding us. Right? We were waiting for this. We were saving this bacon. We were saving it. No harm, no foul. The profit of this pads our what? Our underperforming growth stock, long-term portfolio plays. That's how you play the market. Essentially, that's how this stuff works. And we right up on that gap fill line. We have been talking about that gap fill line for the longest. That 420, right? Go figure, right? 420, right? Right? We've been talking about that for the longest. What did the market do tonight? I don't know if y'all saw that after hours. What did the market do after hours tonight? Did it not go to that 420 area and capitulate at around that point on the after hour session? Did y'all see it by any chance? Did anybody catch it by any chance?
Yep.
Nah, I ain't catch it.
I'm gonna show it right here. Look what happened. Y'all see that right here? What happened? Notice how when it got to 420, what did it do? It capitulated, did it not?
It rolled over, boy.
It fought. It fought hard at that 420. That ain't by mistake, guys. I ain't making that up.
Oof.
Look at that. Y'all see it? They fought right at that 420. They were fighting, boy. They were tooth and nail, tooth and nail, tooth and nail.
Mm-hmm.
Why? Because the bigger chart I just showed y'all on TradingView, that's a gap fill, a gap closure at 420. It was no secret why the algos and limit orders were set to buy the market at 420. Even after hours, when people then went home, went to the bar, went to the liquor, went to the girlfriend, went to the wife, and the market. Go ahead, Oba.
The legs got janky.
See?
That was the knockout punch right there.
That's why them big old red candles that succeeded it were that size and at the weight of the way they pull back.
Right.
Because that was a massive what? Support point.
Mm-hmm.
Gap closure, all that. Psychological zone, call it what you want. Markets ain't happy about that. Now, a lot of big money fund managers, banks, whatever, they got a gang of buy orders for 420. Those who didn't have them set after hours, they got them set, I guess, tomorrow pre-market. They show live. If they don't come into the office the first thing in the morning and close them things out and restructure them, they're going to be in the world hurt. They're going to be chasing the what? The downtrend. Because now their goal is to get ahead of it, to kind of get it back up towards 420. So they're going to say, well, we closed the gap. That's the excuse, right?
Mm-hmm.
We closed the gap. We got to rally now, bro. We didn't oversold. We just oversold. We've been selling off for the long. Oh my God, this bucket, this gone. Again, that's somebody that's dealing with what? Hundreds of billions of dollars as opposed to what? Your 10 racks, your 5 racks, your 1,000, right? They got more to work with. You got to be very methodical with what you're working with. That's the difference. You become actually a better trader than the person who's working with 100 million. Why? Because they have luxury to make sloppy decisions, even though they got, high paid engineers and, statisticians, and they hiring on these people from MIT, a la Kathy Woods. Excuse me, Kathy Woods, my bad. Take that L. We're outperforming Kathy Woods right now. Stop playing.
Facts.
Some people ain't gonna be able to deal with that. That's okay. Numbers don't lie. We may not be net profiting 2 million, whatever, 100 million here, 100,000 here, but our exponential value of our gains that we're getting, it beats that of what her aggregate value that she's getting on a per game basis. Like a per capita scenario, we're beating her averages, hands down. Now imagine if you had the 100 billion like she got. You see what I'm saying? Or the 10 billion or whatever she got in her fund man. What you would be doing with that under the mindset and the strictness that you're working with right now with your rack 10,000, 100,000. See how that works? Ain't no different. You're trying to figure out how to work that efficient from this amount and grow that to this, to that, and then to the 100,000, and then from the 100,000 to 250,000, and then all the way up to $1 million plus, and then on and on and on. See how that works? You respect the grind when you come from what? As they say, from the bottom. Starting from the bottom, now we here, right? How did this all go? Starting from the bottom. Look.
Yep, started from the bottom, now we here.
See what I'm saying?
Mm-hmm.
This industry affords you that. I done got my teeth kicked in a lot of times from the market. Got right back in there. Because I believe in a long-term perspective of what the opportunity could present. A lot of people have to go through that in business. Business success does not come in a straight line. It does not. Even in markets that seem to be just given. So yeah, patience pays in this. We get it, and we're gonna get it. So again, this urban income empowerment show perspective in at least this aspect of when we're talking about investments. And this goes across all asset classes. Now, don't think there's just stocks. This is crypto, it's forex, it's the whole reality, right? It's understanding value. Where how can you number one, at least be able to assess it, and then what to do. Essentially, right after you assess it, what's the next move? I'd like to say, choose well, trade safe, and stay green. It's a simple reality. Choose well, trade safe, and stay green. Consistency is the key. Methodology, research methodology, whole nine. Go through the steps and do it. You already do it again when you're looking for your favorite pair of shoes, when you're comparing against a store that may or may not have it. Your favorite cologne, your favorite hair product. It's the same aspect of research methodology. And Juggle will come to the market and act like all that stuff just goes away. like what? No, use it. Use it. And then build on it. That 420 was magical for the market. I'm curious. I didn't even look at the future market tonight. I literally, before I came on with y'all, I was in a training session. And I came right out of that and came right out of, I had a chance to even check the futures. But they're losing at 420. I know it's a lot of people right now, meaning Wall Street types of the same ilk, whatever. Look, there's some jokers on the phone tonight, bro. There's some people that's pulling the midnight oil tonight. They're on the phone, bro. You was getting to eat dinner with little Bobby and little Brenda, and the fund manager called you like, "Look, I'm gonna need you to get away from the table and go up to your laptop right now." I ain't making this up. That's the severity of that 420 support, because they're having the game plan strategize for potentially, what can come from tomorrow, and we still have no clarity on the old Russian scenario. Like, bro. That's any moment, right? That's what I'm saying. That's one of them any moments. Like it could pop off at any moment.
Right. That's facts.
Right. That's a whole another layer of, man, it can get real in the field. I'm almost certain to go look at it. Let me go look at the future right now. I'm tempted now. Cause that's a mass. You broke that resistance, bro. Cause that was the one that everybody was saving. That was that bacon they were saving. I was saving that bacon. Yeah. Boy, Joker that went in the refrigerator and got that breaking up out the free. Like, boy, I was saving that. All right, let's go see real quick, just on GP. 1 second. Look at that. Look at that.
Dumping.
Now, mind you, the market had a massive bullish futures market last night. Market had a massive green futures pre-market this morning. As soon as it opened up, what happened? Straight down south. See how that worked?
Then it came down.
See how that worked? All day, every day, straight up what? Dead cat mountain. Look at oil right now. Look at oil up 1.55%. Oil ripping. Why is oil ripping right now? Why is natural gas and oil ripping right now and gold ripping right now? Give me one word answers and one word answers only. Why oil is up and why natural gas up and why gold is up? Give me a one word answer. Anybody, go. Why are those commodities up right now? Anybody, go. One word answer. Anybody, take a stab at it.
Russia.
See? I'm sorry. I forgot you had security clearances. Know all that, over. I'm sorry, my bad. I forgot your credential. I forgot you work at the Pentagon. I forgot you said it. You said it in a round table discussion meeting when they have it. Joint Chief of Staff and all that. My bad, bro. I forgot your credentials. I'm underplaying your credentials, family. My bad. Now, how you know that, over?
Research.
Cell phone, laptop, tablet. My bad. I'm sorry. You got to have a high level, espionage type of equipment at your house. My bad. I forgot, bro. You got one of them, log, CP scanners and all that stuff. You got one of them. I'm my bad, bro. I'm undermining your spy equipment, bro. My bad.
Oh, good.
See how that work? Cell phone. Brother got the information on the fly. He just know how to track geopolitical stuff because he realizes the importance of severity of certain things that has an adverse effect to broader markets. Number one, anytime you have a war theater scenario, the first things to get hit is what? Fossil fuels. Why? Because it costs a lot to mobilize any scenario of a what? A war scenario. That's a lot of fuel being burnt. Until they get electrical tanks on the field, bruh, it's gonna cost a lot of money. Unless they get some electrical jets in the air, it's gonna cost a lot of fuel to what? Mobilize all that equipment. Is that rocket science, guys?
Absolutely not.
Do we have to study military strategy of warfare to know all that? Joking around here playing, bro. They got the national knowledge, but they just don't want to put it to work. They get updates all day from, somebody in their DMs, somebody, liking their little post that they put out there that's crazy. But they ain't got no notifications about how to get to the bag. Not one Wall Street notification popping up, one information about this. Joker want to play like that stuff don't matter. Whether it may not affect you directly in your life, but on a strategic level, it's good to know what's going on geopolitically. I would go as far to say that. I think it's very important to know what's going on around the world. Because adversely, we can be affected by it. Why? Because if our scenarios puts us at the what? Lowest part on the totem pole, if they catch a cold, that means Black people going to catch the flu. Jokers don't want to deal with that. So at least if we get this information and use it, not just for our own edification, but we get a chance to monetize it, sounds like a win-win to me. How about that for $1? Make sense? So that's the reality in this. So markets are in a hissy fit right now. And they got mortar rounds firing right now. The media just ain't sensationalizing it quite yet. But y'all already know they're shelling right now. They got bullet spraying over there in that area right now. But on top of that, what did the 10-year do today? The 10-year yield was ripping today a little bit. I don't know where it's at tonight. Let me see where it's at. It pulled back slightly, about 0.96%, right? 0.96%. It got back up close to that what? Near that 2% today. And pulled back some, natural consolidation. But that's another dagger in the tech sector. Right? You already know what the currency pair is looking like tonight. They're going to be all over the place. Why? Because currency is now going to be destabilized because of the potential of what? War. Because whatever the commodity that country pegs to their what? Their currency, meaning their cash crop, if it's affected by any kind of aspect of war, they're going to be in trouble against somebody else's currency. It's no secret why Euro USD is what? Ugly. GPB and USD ugly. Australian against USD, ugly. Ain't no secret why those are getting what? All over the place. Why? Because those are some of the so-called quote unquote what? Superpowers around the world that's have a vested interest in what? Or all this other stuff like that. Not rocket science. Let's go over to crypto. Where my crypto family at? Joker finna get in their feelings now. Oh man, what you talking about, man? Don't be talking about Bitcoin, bro. Look. I love Bitcoin like everybody else, but I'm a statistician in this perspective. I'm not emotion connected. I'm playing the pivots like I'm supposed to. I'm not going too soon or too late. I have targets for a reason. If it's inside of a kill box, I'm not touching it till I see it get near those peaks or those troughs. Simple as that.
That's right.
That's discipline. You learn how to manage money like you're supposed to. Don't get emotion connected. You got guidelines, rule books, handbooks, all this stuff to show you how to chart money, and all that stuff go out the window just because the thing pulled back by $500-$600. Joker get all like in their feeling and lose all kind of bearing. It's okay. Let it happen. The bigger picture is what? Still beautiful until things change. Again, the goal is to get it cheap. To add into it at cheaper prices, if you can, of course, because the long-term thesis hadn't changed. It's under the same market pressure as other assets. There's no secret why silver, gold, palladium, copper, all those things are ripping right now. Aluminum, like how long we've been beating that aluminum drum? like for the longest, right? We don't want to look at aluminum
Long
right
time.
now. What that aluminum stock right now, boy, ripping.
Al-
I'm talking about ripping.
Alcoa.
And yeah, Alcor, even the Comex, right? The futures of it. Let's go see it real quick, Joe GP, right? I'm getting ready to shut up because I know I've been talking a little too long. Y'all forgive me. Forgive your brother. Right?
You got the spirit, brother.
Yeah, I love this stuff, man. I love my people more than this stuff. And I'm like, look, we finna figure a way to kick in this door. That's my whole approach. Right? Look right here. Look at aluminum. Aluminum up a whole percent. Right? And people say a whole percent, she got a whole baby, right? She got you made a whole baby, right? Look at aluminum up a whole 1%. That's a $3,000 what? Comex ticket, future ticket. It's up a whole $33 right now. Gold up 0.3%. Nickel, look at nickel ripping. Nickel up, a whole 1.19%. Palladium back and forth, of course. Palladium was just been ripping for the longest. But all this stuff is the vestiges of the potential aspect of war. In some cases, majority of these metals.
Yeah, stuff important.
Very important. The average person look at this stuff like, man, look, I don't care about all that, bro. What that next turn up at?
Yeah.
What that next jump off at? What that next,
Goes back to you gotta know your surroundings. You gotta know what matters in society.
All day, every day. What makes us immune from that, Oba? I'm asking that question for a friend. What makes us immune from all this stuff?
It ain't our purpose or our passion, brother.
Sad, ain't it?
We gotta work and take care of our family.
Or keep up with the latest, this or that, and just again, just very mismanagement of what? Use of time, use of what? Money, use of opportunity. At some point, we're gonna have to what? Kick in the door somewhere, somehow.
Money is not everything, over.
Right. Until they ain't got none. Well, I sure ain't got no money, but let me get some overtime, man. I ain't got no money. He Bill kicking me in the teeth, bro. He Bill kicking my behind, bro. But didn't I just see you last week turn up at Macy's? Yeah, bro, but I just had to have that though. But that's different. That's different. That's different. What? Well, at least did you buy the stock? Some of the stock though when you bought them pads up out of there. Man, what you meant buying the stock? Man, ain't got time for that, man. I couldn't. All right, my bad, bro. My bad. So at some point it has to matter, right? So, look, to a lot of people, I know this stuff is like, man, yeah, man, we get it, but look, I just ain't ready yet. Well, you pay bills, you ready. You stop at the grocery store, department store, you pay some kind of online bill for a service, that makes you ready. That means you're already participating in the market. Yeah, my bad. I hate to break it to you, are. You're just doing it from the consumer side. That means you're getting the high margin, the end result, right? You're getting all of it. You willing to just, all right, y'all get it. Let me leave that alone. Let me just move on, brother. Move on, brother. Move on.
I think what has to happen is that people got to see all the dollars that they spend. They got to see it going into Mr. Charlie's vacation plan or rental for the summer.
Man, boy, don't make me pull out that meme. I'm about to, boy, don't make me go pull that meme out. You already know what I'm talking
pull
about.
It out over.
Boy, don't make me go there and get that one out. That's the majority of jokers right now. On they little whatever, right? They little jump off, right? They sitting there, Mr. Charlie, boy, I'm talking about 4 exhaust pipes in the back. 4 of them. That thing crackling out there in the parking lot. Who that out there crackling out there like that? And Mr. Charlie out there, he ain't bought that new Murcielago, whatever, that new Bugatti. But then he just buy one 2 years. Yeah, he bought another one. Man, production show must be good, but y'all must be working really good in the factory. Come on out here, everybody. Come on here and let's see this new car Mr. Charlie got. Right?
Mm-hmm.
Look, guys, y'all, look, if you work hard, you persevere, you keep your nose clean, you show up on time, right? You do a little extra, right? When the supervisor asks you to, guess what? Next year I get the new improved edition. Ooh, boy, that'll be the day I hit the clock. Matter of fact, that'll be the day I don't even hit the clock on the way out there. I just go straight to my whip and just drive out the lot.
Just walk out.
I just walk right on out.
out.
Just like, what's wrong with little Leroy? Leroy then went straight to the whip and just hit the gas. He burnt rubber all in the parking lot, get him out of there.
Yeah.
Bruh. Because I'm looking at it one of two ways. I must be doing something wrong, bro. I must be back or hustling.
Yep.
Sometimes it takes that shock in our approach for people to realize that a lot of people will not get it. They'll fight tooth and nail to not to want to accept that level of responsibility. But whatever, right? We're not here to, we're not trying to play the role of, we know where everybody's heart, thoughts, and mind. I'm just using it from a very strategic perspective and saying that we already carry a lot of natural skills, or they call them soft skills. They already put us or make us market ready in most cases than we give ourselves credit for. Because I'm saying we're just looking for opportunities, right? That has path of resistance to get us where we need to go. Again, find me something else that puts you right in the game literally day one. And that's even without proper knowledge. You can just jump right in this and just start buying stuff. That has the potential to accrue interest and growth. That's crazy, right?
Right.
And Joe will still be like, no, look, bro, I just, I need to, I need to take a college course on that or something. Like, what? You need to what? Okay. That's not how this stuff works, bro. You already know more than you give yourself credit for. Let's just help you unpack it. That's the whole point of this. It's the whole point of Urban Empowerment Show, right? It's y'all get it. Anyway, I think I done said enough, man. Let me shut up, man. Let me be quiet. But it's a community for a reason, right? If we value this community as like a lot of people say they do, then yeah, we have to be willing to be, number one, transparent, upfront, thorough, not bridle the truth, and give people direct links to the opportunity, right? Not lead them all astray, not try to, give them all this, whatever. No, this is the reality here. You need to know the good, the bad, the ugly. But you need to know that this has just as much as potential than you starting your own business and getting product inventory and going through the cost analysis and that, what all your liabilities are, whatever. Look, you start this right here right out the gate. Look at the future right now. Since we talking this thing and dropped what? Went down a whole 100 points. Just that fast. It was just sitting at 150, 170. Now it's at 253. That people, again, that 420 point, there's some jokers dealing with that right now. There's some jokers ain't gonna go to sleep tonight. That's my whole point, too. There's a lot of jokers ain't gonna go to sleep tonight. Any bad news that come out on Russia too tonight, that's going to only exacerbate this move tonight. Algo's gonna try to kick in at some point. We know they're gonna try to fight back. These jokers ain't going. Look, they've been taking some L's lately too. But anyway, let me stop sharing. All right, let me wind it down. Wind it down.
Thank you very much.
Thank you very much. Why are you saying thank you very much, Mo? You sound like you want them off right now. No, you can't do that.
Since Mike's still working, it take tax season. That's his own schedule.
Let Oba AE talk until he go to sleep.
Y'all, when you little kid back in the day, boy, and you be trying to stay up late, and you wake up and just start crying for no reason, go back to sleep, cry. You like old school, old school. You got a lollipop in your hand, you just still crying and just lick it, you go back to cry and go back to sleep.
Yeah.
It's crazy.
Since Mo been out the loop for about a whole year and a half.
Ain't been at the loop no year and a half. Stop that.
Since Mike still got them skills, you know how to go. Yeah, that's why I love this stuff, and that's why I value you all, because we really did something. I'm not gonna say abnormal, but we're doing what we're supposed to. I'll just say it that way. Let me say it the right way. We're doing what we're supposed to do.
Yep. Woke up some sleeping giants.
Since we talking about our village, right? I would like for us to have at least a meet and greet of some type.
There you go.
What's wrong? Well, what's wrong with that? We went to Cancun while we in the same state, same country,
and we can't meet up.
And we can't meet and greet our fellow brothers and sisters over
I want to go fishing, so we gonna meet AE.
When I do come to DC,
you got a boat.
Y'all already know I got you, bro. We going straight them boats. I got it all lined up, like 4 or 5, boats we can get in, and we just go right on.
See what I'm saying?
Yeah.
But on the serious side, now I have no doubt, we can do that. And, because, we cover that because, like I say, especially when you came into this through Discord with us over Chris, because, Brandon was already there, but a lot of those guys, you see that, like, this is going back, like, Tim Sykes Day, Rick Gutierrez, Billy Woods, Wall Street. When we start making a little paper here and there, a lot of them guys thought, man, it was like a band of brothers and sisters, of course. That was just common, right? It, like, let's meet up, man. Let's do a meet and greet. So they will meet up in like different Discord rooms, meet up in Vegas and all kind of stuff. It's good for the camaraderie because again, it's a value where, I'm saying it from this perspective where it's not, it's really people who band together to kind of take it to the market, right? So it's a different type of camaraderie, right? It's not about a competition, it's not just to be seen. It's like, no, man, this person really helped me, or this person really provided some, some insight, or this, you know what I'm saying? It's more honest, it's genuine, because it's like, man, bro, we went through a lot to be in a position to put ourselves, in this position, so to speak, right?
Absolutely.
The pace that it took. So it's a different type of energy. That's just my opinion, assessment of it. And myself personally, I haven't really been fortunate to do it in a bigger scale. Now I've met certain traders, online over the years, literally, moved around sports, military, but I go to certain city like, yeah, man, I'm in so, man, let's meet. I've done that, right? Several times, even since I've been here in this area. So yeah, I get it, and it'd be great, especially y'all, because like, man, look, we've been rocking out for years, guys. A lot of us ain't even had met each other personally, but it's so genuine that I know, it's like we already met each other. It just, even though digitally, from a digital perspective, but
right.
Yeah, truly, man, we can do something at some point, and I'm all for it regardless, because I realize it. Again, I tell people every day. That's why I'm very solid in making people realize that we are 100% peers in this. Hence, I say I'm bunt to a lot, or we're intellectual peers, because I don't want nobody to take the approach that like some of our community aspects, and this ain't no shots fired, but it matters. It's harder for a lot of people to come together, even from different schools of thought, because they try to make it so personal. That's the problem with these people, divided in like, nah, bro, because it's like you challenge a person personally. See, we don't have that problem of issue over here. When you show Joker how to get money and break bread together, bro, look, it's like a dog. You take a stray dog home, you can't get rid of. Like, look, y'all can't get rid of me now, bro. I'm just sorry. I'll be right there, bro. Just flick me a crumb. I'll tell you, I'm gonna be right there.
I need to meet AE in the grocery store. I got to get this food thing right.
You already know. I got you. We'll tell mom. We hit up every store. Look at all of them.
I ain't been to DC in a few years, so I think it's about time to come back.
It's cold
anytime. Even like I say, we look. Y'all know what it is. Y'all already know. You're welcome here. Sukasa, Mikasa, how that saying go? Sukasa, Mikasa, however it go. Y'all get a lot familiar. I already know.
I ain't going nowhere.
I am. I'll be in DC.
I mean, they got the veteran thing coming up too.
Yeah, we got the veterans deal.
Okay.
Yeah. I already know, man. So I mean, it's whatever. So, and that's how it should be. Because again, you know how it goes. I mean, you show up and it's about a time or the area. Yeah, I'm in town, bro. Let's whatever, right? Grab a bite to eat or something. Let's go kick it. Fruit of our labor. We're working hard, man. We can enjoy it. And y'all smart, because y'all know y'all gonna write it off, right? Y'all walking businessmen and women. That's a write off, bro.
You already know we write off.
Bro. I don't know.
Absolute facts. Cancun was rolled off. Oh, that was wonderful.
We write trips off. And listen, we go in the door with our little financially focused shirts.
Mo, did we have fun or not?
We had food.
Yeah, we had fun.
Hey,
What's up?
oh,
What's
Chris.
the second one? Hmm?
Chris, I didn't tell you on the second one. I almost got left in Mexico
What happened?
because the guy, when I did my COVID, when I get my COVID test,
Mm-hmm.
he didn't send my results, and my flight was at 7 in the morning, and he wasn't gonna come back until 9. And man, we stayed up all night trying. And their New Year was the Saturday. You know, we celebrate our New Year the Friday. Their New Year, or did I say that right? Yeah, was the Saturday. So nothing was open, no little 24-hour shops or nothing.
Oh,
and I was like, oh my gosh. I started stressing and everything. I had to buy another plane ticket. I purchased another plane ticket as backup because I was like, I'm not, everybody was leaving. And I was like, I am not getting stuck in Mexico.
When that track Chris, left by something in El Segundo. I left left by in El Segundo.
Left my ex.
Got to get it. Got to get it.
Man, I was so scared. I was so scared. And then, you know, I had to start thinking on my feet and whatnot. Can't tell y'all what I did, but I started thinking on my feet. And then I, you know, a little military instinct started kicking in. I calmed down. By 4 in the morning, made some decisions, and then I end up just waiting till the person came in, got it, and we got to the airport. Like my new flight was at 12:30. Got to the airport by 11, but you know, I had the chair, so we just went right up to the front and then end up going. The lines were crazy, but and then we had went on an excursion, and my friend, she didn't want to pay for the taxi to come back, and I said, girl, you know we in Mexico? Because she was like, that's too much money. I don't care if it's $100. Girl, you don't get me back to the resort.
Hey, read the room, know where you at when you out there about.
Yeah, I was like, girl, we in these people country. We can't be cold mess. And then I said, you know what? Lesson learned, Monica. Don't you over here rolling around. You better make sure you good, girl. Listen, I was just like, I said, hey, I told the guy, I said, hey, can you just take me back to my resort? I just want to go home. He was like, okay, yeah. And she was just like, I'm not doing it more. I was like, I'm leaving you. She got in that car. I mean, she was fussing when we got back. I didn't care. But anyways, it was pretty cool. We did the yacht at night. We did our yacht cruise at night. And
it's beautiful when you take a boat at night because you know they put the waters on the lights on the bottom of the boat too.
Yes.
Yes. Nice. That's a good clear blue water.
Yeah. Man, you know, I hate I missed that yacht, man.
But you know, they you know, COVID coming out of COVID going on there. It wasn't too bad, but it, you know, it was a lot of things that you, like when we went last time, the resort we stayed at, they had just opened coming out of COVID, so a lot of things wasn't as good. That other resort was so packed. That you stayed at, Chris, that one was so packed. So we stayed at another one, but they building I think they're building like a Disney or something. They're building a Disney.
Really?
Yeah, up the road at the bigger one is almost done. But yeah, good little trip. I mean, some people, you know, probably have not been on a good little day trip vacation or something in a long time. And like I said, when it's people you've been rocking with, I think we've been internet rolling since 2017, 2016, really. 17 is when more people start getting on the panel. You know, you kind of and you see people face, everybody's not hiding behind a thing all the time. You kind of, it's kind of like you already know. And David laughed at me all the time because he'd be like, you never met Willis in person. I was like, nope, I see him on the internet.
We've been getting in all the years, man. It's like connectivity, you know.
He laughs at me all the time. He'd text me and say, African reporter looking for you. What you doing? I was like, I'm coming. Whatnot, but yeah. What you putting in? What he announced? He announced the special.
I'm getting these little breaking news scenarios coming in late. Yeah, so they already putting together an operation. I mean, ain't no secret. We saw the tanks rolling in and they was already strategically, you know, putting their operatives and they, you know, things in place. And I mean, it's almost but certain now that, because the operate, they already got, of course, you know as well as I know as well,
Yeah.
they already got some,
Yeah. I see they having a they meeting in Ukraine right now. The UN Security Council meets they meeting on Ukraine. The UN on the Washington Post got it live. Okay. Let's see. I guess we just keep our eyes and ears open, right? Everybody rolled out. Well, peace, power, and profit, you guys. Thanks for tuning
Peace, power, and
in.
profit.
And we catch y'all tomorrow, possibly.
I think we got training tomorrow, right? Over?
Yeah, he just dropped off. Yeah, we got training tomorrow. So peace, power, and profit. Thanks you guys for tuning in. Make sure you hit that like button and subscribe to my channel. And we'll see you guys on the next live.
All right, peace.
Peace.
My bad, guy. They didn't kick me out, but y'all done? Y'all finished?
Yeah, I think they finished up there.
And close. Okay, that's fine. Yeah, my internet kicked me out. I had my my VPN running still, and I have it set. I had it set, so it kicked off. So yeah, but yeah. Anyways.